What up, baby? What's up? What's up? What's up? New year, same us.
Spencer, we haven't done a Benzinga live show since last year.
No, you and I, Aaron, have not been together in a year, in an entire year, more like 2 weeks actually. It's been 2 weeks since we've done one of these shows with Aaron and myself. But it's great to be back in the saddle, Aaron. I missed you. I missed you 2 weeks ago. You missed me last week.
Yeah.
Hope you guys had fun.
Yeah, 2 weeks ago, I was out for part of the week on Christmas vacation down in Florida. Last week, I was back in the office. But Spencer was away on vacation. So now we are back. What is up, Zinger Nation? It's great to be back on another episode of Benzinga Live. Today, we've got, like always, a packed show, Spencer.
We got a packed show.
So we're doing a 2022 preview. We're going to talk about some of the, what sectors, what ETFs we like and expect to do well in 2022. On top of that, at 12:45, we have Immix CEO joining us. Spencer will be doing that.
It's like the #1 trending stock of the day, people.
Yeah,
ticker IMMX. We're going to have the CEO on this show.
Right now, the stock is up 120% on the day. So, go ahead and smash the like for that. This interview, I'm excited for it. This is the only place on Benzinga's YouTube, the only place on YouTube you'll be able to go find, free executive interviews for exciting companies like this. So shout out to Zoltan and shout out to our team for going out and getting those interviews in a timely manner so we can have them when they matter, when they're important.
That's it.
Yeah.
You ready to run this intro?
Let's go ahead and do it, Spencer.
All right. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujastyk from TrendSpider. We have a
breaking news.
Hey, I don't know if there's sound on that. If you guys can hear us, let us know. We think we're all good on our end.
I think if people couldn't hear us, we'd be able to tell from the chat already. But for some reason, Spencer and I didn't get the sound on that intro. So let us know. See if you guys did. But all right, Spencer, let's go ahead and start.
Okay, let's start.
So first of all, I want to talk about some of the most searched tickers in 2021. This is from our data from Benzinga, from Benzinga Pro. So we're going to go ahead and usually we don't do this. Usually we don't share.
It's true.
The data that we find like this, but we figured, hey, might as well today on a day like today where we can, take a look back. We talked about this last week, how important it is to kind of take a look in the rearview mirror at your trades to see what went well, what didn't go well, what can we learn from. So here,
no, before you bring it up though, can we guess?
Yeah, let's guess.
That's these are the most. I did not see this. I mean, I saw the article, but I didn't look at it because I wanted to guess for the show. I wanted to not know. So this is an article we did recapping the most searched tickers. Was it on Benzinga.com or Benzinga Pro or both?
It was on Benzinga Pro.
Okay.
Primarily.
Most search tickers on Benzinga Pro last year. For the whole year, is that right?
Yes, sir.
Okay. Let's start with the obvious one. I'm going to guess #1 was AMC. Are they in order? Are they ranked?
Let's see. Many of Benzinga's most read stories centered in the world. I didn't hear the 10. I don't know. It doesn't say if they are ranked from 1 to 10 in most searched. What I can say is that I think some will be obvious. Some I think you'll be surprised by.
All right. Well, the chat's saying Tesla, then AMC. So, okay. I guess we'll just go what's on the list. AMC is on the list. I'm asking. I don't know.
AMC is on the list.
Is it?
Yes.
Okay. Is Tesla on the list?
Yes.
Obviously. Is GameStop on the list?
Yes.
Okay.
All right. Let's go ahead and say they're in order of most searched.
Okay. Fine. Oh,
Tesla was #1.
Okay. Then AMC is 2.
No.
Shoot. What? Is Apple 2?
Apple is 2.
Boom. Is AMC 3?
AMC is 3.
Is GameStop 4?
No.
Damn.
This is where you'll be surprised, I think, by 4 and 5.
Is one of them?
They're similar companies. 4 and 5 are similar companies.
All right, guys, we're guessing the most searched stocks on Benzinga Pro all year. We got #1 was Tesla, #2 was Apple, #3 was AMC, and #4 was GameStop.
No.
Isn't that what we said?
No, I said you'd be surprised by 4 and 5.
Oh no, we're sorry, we did not get 4. Oh,
GameStop is 6.
okay. GG in the city, Moderna and Pfizer.
Nope.
Shoot, GG in the city.
That's a good guess though.
Not Yoda. That's what I. Okay, Patrick Starr. Good guess. Nvidia and AMD.
AMD is on the top 10. Nvidia is not. AMD comes in at 10.
Okay.
Nvidia is in the honorable mentions.
Okay. Actually, I don't think Yo-Yo. I don't think it's Neo and Lucid. I don't think those stocks aren't. Oh boy. Okay, he said 4 and 5 are similar.
Wait, what you just said?
She said Neo and Lucid.
That's 3 and 4.
It is?
Or 4 and 5, sorry.
Really?
Yep, Neo 4.
Ashley, yo.
Lucid 5.
Ashley, yo, you got it. All right. 4 and 5. And then we said
and then GameStop is 6.
GameStop is 6.
So we don't have 7, 8, 9, or 10.
Okay.
I'll give you a hint. You'll like this, Spencer. One of the remaining 4, 7, 8, 9, and 10 is an ETF.
Oh. Okay. ARKK.
Nope.
What?
Well, it's a ETF that tracks index.
Is it SPY?
Yeah.
Okay.
So we're still missing 3. Well, no, we're missing 2 because 10 is AMD. We already got that one.
Okay.
I don't know if you'll get
10 is AMD and 9 is SPY.
Yeah, so we're missing
7 and 8.
Or no, sorry, 8 is SPY. We're missing 7 and 9.
7 and 9. Okay. Can we get a hint?
One should be not obvious, but pretty. I mean, it
Palantir.
Yes.
Really?
Yep. Is 7.
Palantir is 7.
Yep. And then 9, I don't think you're ever gonna get.
He says we're never gonna get. Wait, we're never gonna get 9.
It's a biotech company. I'll tell you that.
All right, it's some random biotech.
Pretty much.
All right, is it Sava?
No, close.
Was that close?
Close.
All right. Born to be free, DWAC. I don't think DWAC had enough time.
No, but DWAC probably was one of the most searched of like the month of November or December. You know, one of those months where it was.
Oh, good guesses now. Ocugen?
Yep.
All right, Born to be free. Got it.
Right. So now that we got them all, I'll go ahead and pull this list up.
Yeah.
Shout out Chris Kache, who put this list together, as well as Bert, who Bert is our kind of OG developer. He helped Chris gather some of this data. So you can see we have Tesla number 1, Apple number 2, AMC number 3, which I'm surprised to see such a kind of difference between AMC and GameStop. I would have expected those two to be kind of like hand in hand next to each other. Then we have Neo and Lucid. We talked about those.
That is surprising. I totally wrote off Ashley's guess because I was like, there's no way Neo and Lucid are among the most searched. And here she is right. I am wrong. I'm Neo. Lucid I can maybe get though, because Lucid had the whole thing with CCIV and that SPAC and the vote. But Neo? Really? Neo?
I think, Spencer, we have to keep in mind like how ridiculously hot the whole EV market was at the beginning of last year. And I think because of that, because of everything that happened in January and February of 2021, where we saw companies like, Plug Power, these kind of random EV companies just run a ridiculous amount, we saw interest remain in Neo and in Lucid throughout a lot of 2021. So to me, it's not so surprising to see these two names on the list. It is surprising to see them ahead of GameStop and Palantir to me, because GameStop and Palantir and obviously AMC were to me like 3 of the biggest retail driven trades throughout the last year.
Wait, I just want to pull up that Neo for a second, and then we'll go back to the list here.
Yeah, so you can see on the chart where I'm talking about back at the beginning of 2021, January, February, it seemed like any EV name out there, regardless of what the company's done, regardless of if they're even producing cars, just went absolutely berserk.
Yeah, and if I can even zoom out, I remember thinking, this is crazy. I remember looking at Neo in like 2019. And I was like, this thing is over. The story's over. The stock was like $2. And I was like, yeah, Neo was done. Neo's dead. And then from 2 to 60 in my face. But okay, so Neo was 4, and let's go back to the list now. And then Lucid was 5.
Yep.
And then GameStop, which I guess that makes sense because GameStop really, once AMC kind of went crazy, I feel like GameStop kind of fell by the way after the hearing, which was when, in like June? like GameStop kind of just fell by the wayside. I don't know. Do people talk about GameStop still? Clearly they do. It was the 6th most searched stock on Benzinga Pro last year.
Yeah, no, I mean, yeah. Like you
know.
said, once AMC kind of took some of GameStop's shine, but you know, I think we'll still see more interest in these stocks in this year than like the average stock, but it will take another one of those runs that we've seen in GameStop or AMC to really get that frenzy back going again.
Palantir is obvious. That's a darling social media stock. That's a darling retail stock.
Yep.
The retail.
I mean, look at that range from the 52-week range, 17 to 45. And it's very close.
And it's close to the 17.
Yeah. So,
oh boy. All right. The SPY makes sense, right?
Everyone checks the SPY for if you're newer to investing and newer into trading and you want just the easiest, quickest way to get a gauge of how the market is doing. All you have to do is just look at, like, literally, I Google SPY price. Probably what?
You Google it?
Well, if I don't have like Benzinga Pro open, it's
you actually Google like SPY price.
Yeah, like because it just pops up right here and shows you.
All right, okay. To each their own.
I do that probably 10 times a day to just see like what the markets are doing, right? Because you can look at you know, there are other indices, but if I Google QQQ price, that's really only giving me a look into big tech. Or if I Google Dow price,
the SPY is also giving you a look to big tech mostly.
But I would argue that the SPY price would be more indicative of the overall markets compared to the Qs, compared to Nasdaq. I mean, I guess if I really wanted to,
you would look at the IWM.
I would look at the VTI maybe,
or the IWM.
Yeah, VTI is the Vanguard Total Stock Market Index, so that's like literally every single stock out there. The IWM is the Russell 2000, so that'll give you the best insight into kind of how the small caps are performing, which for a lot of people you might as well be looking at the overall market by looking at IWM.
So okay, SPY, not a surprise. SPY also routinely takes in the most money because, you know, it's what it does. It was the first ETF, and yeah, it's
Ina in the chat, IMMX. Yeah, we'll take a look at IMMX. If you're just joining us here in about 1 hour, we will have IMMX CEO on again. This is really the only place on YouTube you can go to get fresh CEO interviews on a day where the stock is up 100%. You know, you're not going to see this on CNBC or whatever. So go ahead and smash the like for Zoltan going out and getting that interview. Huge shout out to Zoltan.
Yeah. So this is the chart of IMMX today, right? Stock's up 100%. Has it traded 100 million shares yet? The last I checked, it was at like 90. It was at like 92 million shares for the day. We're at 108 million shares and now have traded in IMMX. This is your number one trending stock of the day. So we will have the CEO of IMMX on in about 1 hour from now. That'll be Dr. Ilya Rachman. So very excited to talk to him about the news there today. But back to Aaron's list here. Ocugen. This is you gave a good hint in that it was a random biotech, because there are a handful of those that just can't seem to die, and this is one of them.
Yeah, I mean, we see this often in the market, Spencer. Kind of a biotech you maybe have never heard of, just up 100% in a day. You know, so we saw that a couple times with Ocugen, and that was enough to kind of get the retail interest in there.
Sorry, that's my fault.
All good, Spencer. But yeah, I mean, it's important to a lot of times. You know, when you see
can I pull up that Ocugen chart?
Yeah,
that wild Ocugen chart.
When you see a biotech, you know, go crazy like this, oftentimes, as you can tell by this Ocugen chart, if you wait till once it's up, you know, more than 100% or more than 200%, and you buy that top, you can kind of get burned on it. So we have a couple biotech experts, of course, Vivi Biotech Queen, and so that's why it's really important to kind of try to find some of these companies before they put out those FDA approvals or whatever the news is driving the charts, and knowing that, like, hey, look, this isn't going to come on all of my biotech picks, but if I pick, say, 5 of them and 1 or 2 of them gets that approval and gets that spike, then you can still be in the green. It's all about like managing your position on these. I always equate it to kind of going to the casino, playing roulette, because you never really know, right? You can have an edge, you can, you know, do all the research you want, but at the end of the day, you're not going to know for certain which one of these biotech stocks are really going to spike off this, you know, off these approvals or whatever it is, whatever the catalyst is.
And the Ocugen is actually like a case study in like the best case scenario, right? Because the people that bought this thing on the first rip had a chance to get their money back, right? If you bought in May, if you bought it on the second rip, you had a chance to get your money back in November, right? It is very rare for that to happen, for a stock to like rip. You know, seeing one rip, we're seeing it today in IMMX. Rips like this are not unusual. They actually are par for the course in biotech land. But to see it happen, not once more, but two more times, is probably what made the stock that, you know, among the most searched stocks on Benzinga Pro last year, because it gave you, even if you bought the high in February, you had basically you had two more chances to almost get your money back, which is very rare. So yeah, the stock not behaving like a normal biotech does.
And Proton 73 hit it right on the nose. Biotech is the sector that sucker punches. I mean, you can get sucker punched in any sector, right? You can buy a tech stock that's up 100% and it ends up going down, but more so than any other sector, biotech, the share prices are driven by these kind of binary events. Does a drug get approved? Is there good news coming out of the clinical studies? So again, not for the faint of heart to kind of go out there and try to pick some of the biotech stocks. But with that being said, you do it well, you can make a lot of money in the biotech space. Spencer, before the show's over, remind me, I want to take a look at the biotech ETF. That's just like the total biotech ETF into 2022, because that sector as a whole, the biotech sector as a whole, and that ETF that tracks it was one of the sectors that underperformed.
Oh, it got freaking crushed last year. You want to do it now or later? Later or now?
We can do it during
later.
that. Okay, we can do it later.
We'll do it later. Okay, yeah.
Mighty Soldiers Trades. I had Casino Windsor kick me out for running my system of roulette for 3 hours. Email us at shows@Benzinga. Maybe we'll have to get you on the show to talk about that roulette system, because I've
how would you have a roulette system? How does that work?
I'm sure Nick Robinson's got a roulette system. I have played roulette like one time and I don't really understand it, but everyone always says like, oh, roulette's actually, you know, your best odds at the casino, all this. So I would love to learn.
Really? All right. I'm not educated in my roulette, so apparently.
Oh, no. Sorry. Crap. I was thinking of craps.
I was going to say.
Craps is the best.
How do you have a
how do you have a roulette system? I always just throw it on 5 because my birthday's May 5th, 5-5.
5 on a red from Entourage. All right. Anyway, back to the list here. And then AMD, what was your last one? Right. And that makes sense because AMD is a freaking monster.
Yeah, and AMD and Nvidia are both up nicely today. I think about 3-4%. So we'll have to take a look in at AMD, see if there's any specific sector news driving those semiconductor stocks higher. But I have another list I want to take a look at, Spencer, too.
Another list, more lists. I'm loving the list. I love when Aaron comes prepared with like lists and stuff. So
yeah, unfortunately, as much as it pains me, this one is not on.
He's getting subscription blocked right now.
Let me see if I can. I might have a workaround here.
Why don't you send me the link and I'll see if I can get around your paywall. Paywall blocked. Oh, he got it.
I got it.
Okay. No, he didn't. Send me the link. I think I can get around it.
I think I got it.
Okay. I don't think you did, but
I got it.
All right.
See.
Okay. He's gonna promote some Benzinga competition, but we'll allow it.
Well, we're putting out. I'm gonna put out a content piece inspired by this one, we can say.
Okay.
So far, what we've done is we've looked at the list of the most searched tickers in 2021 on Benzinga Pro. And so that's coming from essentially what are retail investors, what are retail traders, what are Benzinga Pro users interested in?
Mm-hmm.
Now we're going to kind of go on the flip side, Spencer, and we're going to say, what is exciting to analysts? What is exciting to analysts, ones that work at the big investment banks, ones that work at the big investment firms? So again, if you're newer to investing, essentially, the big banks, whether it's Wells Fargo, Goldman Sachs, JP Morgan, they have analysts whose job it is to essentially search and analyze stocks and see what do they determine that this stock is a sell, is it a buy, is it overweight, is it outperform? And Spencer, maybe we can go through all those ratings and kind of break them down exactly what they mean, because obviously you know, buy and sell are pretty self-explanatory, but you know, what does outperform mean, or what does overweight mean? What is it? What is over?
I mean, they're all kind of the same. These banks, they love to have their own terminology, but typically speaking, you'll have three categories, right? Buy, hold, sell, overweight, neutral, underweight, outperform, neutral, underperform. They all kind of mean the same thing, right? And you know, it's oftentimes not so much notable. It's not as notable necessarily what the rating is, as maybe like how does it compare to your prior rating, or like are they giving like a crazy price target? But these are firms that, you know, we've talked about this before, that they skew. There is a bullish bias out there among these firms for a very practical reason. But every year, you know, we're at that time where everyone's dropping their 2022 predictions, their end of the year price targets on the S&P 500, right? Their favorite stocks for the year, their least favorite stocks for the year, and we have one of those lists here now. Correct.
Well, this really is a list. So here's what I was going to say, because just like what you said, there's a practical reason for analysts kind of having a bullish bias, and that's because you know, these analysts get access to these companies for coverage, and obviously, you know, it just makes logical sense. They're going to get more access, you know, whether it's the executives to data, whatever it is, right, by being bullish, saying like, oh, hey, say I'm an analyst on, I see Disney in the chat, say I'm an analyst on Disney and I'm really bullish Disney. They know they can share me good news that may influence my rating on Disney. But I think what we've seen, Spencer, over the last, I don't know, 10, 20 years, we've kind of seen analyst ratings, I think, move stocks less. Like, it used to be that if you saw, at least from one of the big banks, at least from like JP Morgan or Morgan Stanley, if they put out coverage on a stock, it would really move the price. And I think we've seen a little bit less of that, maybe.
I mean, they still move stocks, but they move stocks a lot less than they did before COVID. I think COVID kind of changed. Like, there was definitely a time when we would look at ratings every single day, frankly, because it gave us something to talk about, right? But yeah, ever since COVID, they don't move stocks as much as they used to. Probably because now there are like bigger macro concerns between COVID and inflation and the Fed, and those things probably affect the market more.
And here's the last thing before we get into this list, I would say about analyst ratings is it feels good, right? It gives you that confirmation bias. If you buy a stock and then you see like, oh my God, 90% of analysts are also bullish on this stock. But I don't think any trader or investor out there, at least any good ones, like go purely off analyst ratings. But with that being said, if you have, say, 50 analysts that, again, whose job it is, right? They do this day in and day out where they're researching stocks, analyzing them. If 90% of them are bullish on a stock, does that give me some conviction of, okay, you know, people are seeing something in this stock, like I should look at it? Yeah, I think it does matter at least a little bit. So that's what this list is, the stocks that have the highest percentage of bullish ratings, right? So it's not, you know, 5 out of 8 people are bullish on the stock. It's stocks that have like 90% buy ratings or higher. So
I think that is notable, because it's not so much like,
it's a consensus.
Exactly.
And the consensus drives, that sentiment drives the share price ultimately, right? Like, more like we've seen this over COVID. It's not the valuation of a stock. It's not the fundamentals. It is what is, and we talk about this with Tim Quast, it's what is the sentiment? Are people going out and buying this stock more than they're selling? So let's go ahead and pull this list up. Again, this is from Market Watch, unfortunately, but we can still take a look at it. So
and I was gonna add, no, I'm sorry, just start the list and I'll add what I was gonna say.
So among the S&P 500, 93 stocks are rated a buy or the equivalent by at least 75% of analysts working for brokerage firms. So out of the 500 stocks on the S&P 500, less than 20% have higher than a 75% analyst buy rating. So I you know, again, I think this is notable that we have.
That is interesting.
And so let's take a look at some on this list.
So these are the stocks that the street is just most bullish on.
Correct.
Okay.
So for instance, Alaska Airlines Group, ticker ALK. And if we take a look at this stock, We can see that before COVID, the stock was trading at about $65, currently at 53. So still has not gotten up to its pre-COVID levels. But Alaska Airlines has 93% of analysts saying go out and buy. Similar for Caesars Entertainment. Well, let's just, because there's 93 stocks on this list, so we'll just go through and kind of find the ones that we care most about, the biggest ones. So I would say, PayPal, that's interesting because we've seen PayPal kind of get crushed down from 273, but still 84% are bullish. And the implied 12-month upside, that's based on price targets, seeing, okay, if this stock reaches this consensus price target that's in this column based on its current share price, what would our return be? So for something like PayPal, they're putting the price target essentially back or at 273. I forget where it was at before. But if it reaches up to there, it's a 43% upside. Going down the list, Southwest Airlines, another airline, $57 price target consensus. Salesforce, I mean, this one's a monster. Salesforce, of course, bought Slack. We use Slack every day, Spencer. Price target of about 330, implied upside of 30%. Bath and Body Works. This one was one of the big winners during COVID, and still analysts bullish on it, 86% bullish rating. Had a return last year of 133%, but they're looking for more gains. They're looking for a $90 price target. So I don't know what your thoughts on Bath and Body Works, Spencer.
I was confused it with
Bed Bath and Beyond.
No. What's the one, the Victoria's Secret, or is that Bath and Body Works?
L Brands.
No, it's not L Brands anymore. Is that Bath and Body Works?
I don't know,
because they split.
Someone in the chat.
Yeah, wait, that is Bath and Body Works, right? Okay, I'm not crazy. L Brands used to be Bath and Body Works combined with Victoria's Secrets, and now they're separate companies. Okay, never mind. So these are interesting. I think like what we're talking about here is like what these analysts really are at the end of the day. They are public defenders. They are defenders of a stock, right? Like their buy rating, whatever, their crazy price target, what that signifies is they will defend that stock to whom? To everyone, anyone that will listen, to the media, but mostly to clients with real money, right? They're the ones that will go out and defend, and they will defend your stock. And you think of it like people were defending your stock on Twitter. Well, these guys are defending the stock to people that have managed way more money, right? And they will be that bullish voice in you just say you're managing, a couple $1 billion and you're trying to get some exposure to retail or whatever. And these guys will be in your ear whispering, Bath and Body Works, Bath and Body Works, Bath and Body Works. I don't know, whatever segment they're in, but like you get the idea, right? Is these are public defenders of these stocks. That's what their bullish ratings indicate to me. So we have some retail. I'm sorry, we have some reopening. Was the takeaway from this list?
Yeah, I mean, that to me was one of the things that stuck out to me, Spencer. Of course, like I grouped together in that reopening trade, the airlines. So you have Alaska, you have Southwest with like Caesars Entertainment, the casino, gaming. I think at the end of the day, what that's telling me is these analysts are recognizing that, hey, look, a lot of these stocks are still not up to their pre-COVID levels. We expect, them to be
come back.
Coming back, bringing in more revenue this year. So I don't know. I mean, we've talked about that trade a lot. It felt dead for a while. That, okay, it looks like big tech, your Amazons, your Apples, your Facebooks, your Nvidias are getting all the love. It's not, going back to these value stocks of the airlines. But to me, that's showing, hey, the analysts are saying that 2022 could be a big year for some of these kind of value reopening stocks.
I forget if I said this on the air or not this morning, but like if you gave me, it said, Spencer, you have to pick between the casinos, the airlines, or the cruise lines for this year, I would pick the casinos. I don't know why. I really don't know why. I just like I would pick if you gave me like the three reopening sectors: casino, airlines, cruise. I'd go casino for the rest of this year. I don't have any real reason for that.
Well, I think it's interesting because I think it depends on what you're trying to play. We'd have to look into it to see which gaming companies have the most exposure to like real in-person casinos, which versus the ones that are more weighted toward like the online gaming. Because I honestly, I think a lot of these companies that are in the online sportsbook space are struggling just with, as far as how much they're paying in promotion and marketing to try to capture up as much of that market share as possible.
That's fair.
So to me, like with what you're saying and kind of that reopening trade in general, I would rather put my money in a name that is more weighted toward those physical in-person casinos versus the ones that are all, online sportsbook. I mean, if we look at DraftKings, if we look at Penn, those ones have been getting beat up. Do I think they'll come back and eventually, be trading higher than they are today? Yeah, of course. But I like you, Spencer. I think that we'll see more and more people, in Vegas, in the casinos. I think especially after, this current wave of COVID, that these names will become even more enticing.
So I'll tell you what, I'm going to Vegas the very beginning of April. I'll be there for 2 or 3 days in April. So I will do some boots on the ground.
I love it.
Channel checks for us when I am in Vegas in April for the weekend. And also, by the way, I was booking some flights last night because I have some travel planned this year, like throughout the year. So I was just getting ahead of the game, booking some flights now. And flights for the holiday season, like prices were like insane, but they were definitely much more normalized.
Really?
Yeah. At least for me, I was looking yesterday. I was looking for May and June, right?
My God.
And like,
holy shit!
What? Because I'm early?
I've never looked for a flight more than like. Apparently, here's what
I don't know, man. I don't know.
Here's what I learned.
I was in productive mode last night. What can I say?
6 weeks.
Is that the optimal?
Like the sweet spot to look for flights. That's what I've read. If you go too far out, they have like a set price. But then, like, say if you're looking 6 weeks out and the plane's not full, they might lower the tickets a little bit. I don't know. I had an econ teacher in high school who was all about, kind of like hacks and stuff like that. Yeah. And we actually learned something. I don't know if this was changed because I don't know if this was like brought up in like class action lawsuits or something. But for a while, airline companies would track like your cookies and stuff and see if you were searching for the same flight. And actually like say you were looking for your flight for Vegas that you needed to go to. And you looked at it last night, but you didn't buy the ticket. And then you look at it back today. They'd actually like raise the price.
Oh, by
like $20 because they know, okay, like he needs to get here on this day. So then if I looked up a flight that you had never looked at, and we actually like tested this in class in high school where he's like, I've looked up this flight a few times, and he had us look it up, and it was cheaper for us than him who had looked it up.
All right, Young Bunny says Wednesday is the cheapest day. I am by no means an expert in booking travel. Actually, Jason Raznick, if you asked him, he would tell you he is the best. But I was just commenting that my own experience seemed like the prices were more normalized than they were for the holiday season.
Easy Mike saying Bets is the round hill ETF that tracks basically all the big players in the gaming space. I had a good trade on Bets. It wasn't even last year. It was the summer of 2020. So I think my memory, if my memory serves me correct, the Bets ETF opened in like May of 2020. So to give some context to this, the whole COVID crash happened in March of 2020. Everything was still kind of shut down. And the ETF opened like 2 months after that in May when there were no sports going on. And it was trading at like $15 or $16.
Yeah.
And I bought some like calls for October or November of that year, being like, yeah, this is when NFL's coming back. This is when basketball's coming back. Like this whole thing is based on people betting on sports, and there were no sports going on. So I bought some calls for when there were actually sports, and it worked out. And I was like, oh my God, this trading thing is like the easiest thing in the world. Like to me, it was just the most obvious.
You're a genius
thing ever.
You're a genius, man. All right.
Well, yeah, I mean, I wouldn't go that far, but it worked. That trade worked out.
Ashton says I should be using DuckDuckGo. Maybe he's right. I just use Google Flights on my Chrome browser. But okay. So the takeaway from this list was what? That we have some reopening.
Well, we just looked at some of the biggest names in the large cap, and this actually isn't a full list of all the 93 stocks in the S&P 500 that have a buy rating of 75% or higher. But I wanted to take a look. We also have some that are mid caps. Which I wanted to take a look at these because, oh, look, Spencer.
What?
VSCO.
Yeah. Really?
Is its own.
No, I know that. But can we pull up the chart? Let me get the chart up of VSCO. This is sometimes the chart and the consensus rating can be totally out of whack here. Because look at this VSCO chart. So that list is saying that the analysts, broadly speaking, Wall Street analysts have
82% bullish ratings with a consensus price target of $82.
I mean, if I'm not saying they're wrong, but if they're not wrong, then they're early. This chart looks pretty bad.
You know what? Can you go back to my thing for a second?
Yeah.
So we talked about analysts getting more access. I'm onto them, right? Callaway Golf. I think these analysts that are covering Callaway know, hey, I put out a good price target and a bullish rating. They might send me a new set of golf clubs.
Come on, really? You think that?
No, that's probably breaking some like SEC violations.
That's got to be. There's no way.
But we should try to do more of that, Spencer. We should invite companies on that we want some free gear from or something, you know?
No, we shouldn't. He's joking. Everyone relax.
Totally joking. I would never do that. But okay, take a look at this one.
Sunrun.
I talk about Sunrun a lot because it's my favorite play in the solar space. Look at the consensus price target, $72. And Spencer, you can go ahead and pull it up on your chart.
I'm going to.
Not only have we been up there before, we've been well higher than that before. I think we got up to $90 earlier last year. Here, Spencer, let me throw yours up. And I don't know. I've been saying I like this stock. It keeps going down, but hey, we got to turn around sometime. And I'm going to go ahead and put my, what is it? Foot in the sand.
Plant your flag.
I'm gonna plant my flag, and right here on an ugly chart.
Oh boy!
At $35, I'm picking Sunrun as my 2022 stock of the year.
Oh, a 2022 stock of the year. Can we get some sound effects for that?
Very nice.
All right. There you go. AB with his 2022 stock of the year. You know what? You got to give. This is the kind of stock where if you're in a contest and you say like, I gotta pick the best stock. You want to pick a Sunrun, a name that's so beaten down that you basically call the bottom in it.
Well, and it's just in an industry in clean tech, a growth stock that has the potential, to really. I mean, it could double, it could triple by the end of the year for all we know. But Spencer, that reminds me, before the day's over, we should create a Google sheet for our viewers out there where everyone picks their 2022 stock of the year, and we'll just check in on it periodically every couple of weeks, see who's performing the best.
Good deal. I sold on Friday. I had a clean energy ETF. And Sunrun was in there, and I sold it
because you saw Sunrun in there.
No, that's not why. I was, it was Friday. Obviously, it was the last day of the year, and I was just doing some like last minute, just like tax selling, and I was down.
Mansion's got to come around, right?
I was down like 3% or something, and I was like, you know what?
You think?
Screw it. I'm gonna get.
I think he's got to come around.
Man, I have no idea, but I forget what the ticker was. It was some.
What, a solar ETF?
It was clean energy.
ICLN?
No, it wasn't that. It wasn't that clean. It was the other one. I forget what it was. But I saw that, so sorry everyone. But talk to me, Goose. We would love to have Neil back. Talk to me, Goose. Tweet at Neil. You gotta tweet
Neil's tweets.
At Neil's tweets. Tweet at Neil. Tell him to come back. We would love to have Neil back for sure.
Anytime. He's got an open invite.
Yeah. Okay. Should we do some IPO stuff?
Yeah. Just quick preview for the rest of the show. So here in a few minutes, Matt Hammond from IPO Warriors will be joining us. We're going to be doing kind of a wrapping up our. We started the segment last week. If you guys recall, we kind of ran out of time, but we're going to be doing a preview of 2022 IPOs, which ones we're most excited for, as well. I don't know, Matt. I'm giving Matt the free license because I don't know if we ended up getting through kind of the 2021 review, but we can take a look back as well. And then at 12:45,
that's gonna be it.
12:45. What do we got, Spencer?
We got the number one trending stock in the land today is Immix Biopharma, ticker IMMX. We're gonna have the CEO, Dr. Ilya Rachman, on this show in 34 minutes. 34 minutes from now. to talk about what is going on. Why are they going bananas? What is the news? Well, we know what the news is. Why does it matter? That'll be at 12:45 Eastern Time today. Dr. Ilya Rachman from Immix Biopharma.
Woo!
Woo! Woo!
And then at 1 p.m., we got Jake Wujastyk from TrendSpider joining us. We're going to be talking about some charts and technicals with Jake, as we always do.
Woo! Woo!
A little more.
Woo!
All
Yes.
Right, there we go.
All right.
Jake's always got some great charts. I was looking at his Twitter a second ago. Looks like he's been tweeting about Disney, PayPal. So Jake's always got the goods for us. He's got the big names, the charts that we want.
He's a chart machine. Very few people I know that can rip through charts like Jake. Honestly.
I think he just sees I think when he's out in the real world, he just sees stock charts every
he might.
You know how some people see colors
yeah,
and stuff. I feel like Jake is like that, but with charts.
Well, ask him. How about that?
Yeah.
What's he called? I don't know. Synthasasia.
All those words are made up.
Wait, what's that called? Syntha something.
I don't know.
Anyway.
Someone from the chat. Some psychologist from the chat. And then at 1:30, options Mike will be joining us. So we'll be talking about some options. Love me a good option, and that's my New Year's resolution for 2022 to trade more options.
All right. That being said, let's bring on Matt Hammond. Let's talk some IPOs. We just set it up. Synesthesia. Synesthesia. Thank you, Mike. Synesthesia. Okay, I was close. Whatever.
What's the word where if you see something or you learn about a word or something, then you start seeing it everywhere, every day? There's some word for that phenomenon? You know what I'm saying?
I know what you're referring to, but I don't know what the word is.
All right, someone in the chat will help.
Maybe Matt knows. Matt, do you know what word we're talking about right now?
I do not, but if you tell me, I'll probably see it everywhere for the next few days. So, anyway, that IMMX.
I had this problem earlier. I had this problem with Tim. Hold on.
Oh, we also had the problem with our intro, so maybe they can hear him, but we can't.
Oh shoot, yo, that's me. I bet you they can hear you, but we can't. Hey, producer Aaron, where you at, man? All right. This is awkward because I think the people can hear you.
Okay.
But we can't.
Wait, Matt, go ahead and talk again.
Hello. Testing 1 2.
Okay, yeah, his sound's definitely coming through.
Okay, so the problem is for us. Okay, so
I'm gonna go try to figure
so Matt, let's do this because I can't hear you. Actually, I can hear you kind of. Go ahead. I see you have your screen shares. So let's bring those up. I'm gonna give you the floor, and then I'm gonna try to listen to you low key in the background.
Okay. So yeah, last week we talked about the best IPOs from 2021, the best and the worst. I'm not going to kind of recap that. I think we'll put the past behind us and look forward to 2022. There are quite a few IPOs, or as I say, private companies that I would love to see IPO this year. We don't really know for sure that any of them will go through with the IPO at this point. A lot of the strongest companies have been staying private longer. They've been doing more fundraising in the venture capital markets, in the investment banking markets before they go live. But they do tend to want to go live at some point because the IPO provides a liquidity event for these investors who are pouring in their money to build these companies, and for the employees and the other insiders who have spent their lives building up these companies. Revenue share, profit share only goes so far in a huge company. So at some point, we do tend to see these go through with the IPO, but we are seeing companies do this later. The kind of flip side is the SPAC, which kind of has adopted the role of taking on the less mature companies, partly because the regulations and the filing requirements are so much less stringent. And it's a riskier ball game in some regards, and one that you guys have other people that are great, Chris and Mitch, that specialize in that. So I'm not going to go too much into SPACs. I am going to talk about the companies that are kind of lined up for IPOs in 2022 that I am watching for debut trades. And I have written up a pretty extensive newsletter to go along with this. If you guys sign up for the newsletter at ipowarriors.com, I'll be sending that out tonight. It gives you a little bit more of an in-depth analysis of what worked in 2021, what I expect to work in 2022, and I cover all the stocks that I'm reviewing in this presentation with a little bit more in-depth analysis in the newsletter. So go ahead and sign up, ipowarriors.com. The newsletter is free. And with that being said, let's jump in. So I've picked out about 20 IPOs for 2022 that I want to review. Not all of them are particularly great plays, in my opinion. I'm going to start kind of with the strongest plays and work my way down to some of the ones that I'm not so convinced about. And one thing that I like to keep in mind when I'm trading IPOs is stringing together wins. For me, it was incredibly lucrative from 2020, from about May 2020 to, about December 2022 or 2021. I made a really stupid trade or two to close out the year and was still up nearly 1,000% using this strategy. I just take a chunk of money and I roll it from one IPO into the next IPO into the next IPO. And I'm generally aiming for anywhere between a 5 to a 15 or 20% win. And if you line up 7, 10 to 15% wins in a row, you'll double your money. And then, you hold on for a couple, really big winners and you kind of like leapfrog a step. But if you can pick 7 winners from this group that I'm sharing here with you, and you took your kind of initial capital and just parlayed each one into the next one, you'll double your money. So you're looking for a good way to increase, and you don't need to do a ton of research or spend a lot of time. A lot of these trades I'm in and out within 2 days. Buy in on the IPO, wait for the day 2 media cycle, sell on the morning rip. And, that's where I optimize my profits on many of these. So that's kind of my strategy going forward. I'd love to do more than that, of course, but I kind of reassure myself, hey, what I lost at the end of the year, I'm going to get that back, and I'm going to double what I have right now in terms of my trading block that I set aside for IPOs. I'm going to pick about 7 or 8 of these and ride them. So let's jump in. Stripe. This is probably the most anticipated potential IPO on the market right now. I think most of you know what Stripe is. It's a payment software company for e-commerce that basically do a very streamlined API that allows companies as big as Amazon and Google to handle credit card transactions through their stores. Even small vendors, like I use Stripe. Stripe makes it very easy to build payment gateway systems into websites. I have clients that use Stripe. They have a very, user-friendly system for building payment gateways. Their most recent funding round valued the company at $95 billion, which is pretty huge for a private company. And their CEO is commonly cited as saying that, hey, they don't really need to go public. They're comfortable in their financial shoes. And, the only reason really to go public for them would be to provide a liquidity event. But this is the kind of play where it's just so obviously strong that even with a high float, even with a high price tag, the opportunity to buy on the debut, let it run, for a day 2 or day 3. This is the kind of thing that would take Wall Street by storm. Every media outlet will cover this like crazy. It's the kind of IPO that really got me into this trade in the first place. And if it doesn't,
I would say,
away, yeah.
Matt, I would say that Stripe is a name that people have been clamoring for, like an IPO for like 3 years, 3 or 4 years. It's like every year I was like, I remember when it was like top IPOs of the year. It was like Uber and Dropbox and Stripe, and Palantir, and all those other ones.
Palantir and Snowflake were the two that I built my strategy really in anticipation. It started with I think it was around Beyond Meat and Stripe, Zoom and CrowdStrike. Those 3 kind of, I bought Zoom on the IPO, but it wasn't part of like an IPO strategy. Just like, oh, this company is going to do really well. And then CrowdStrike, I missed a buy-in by like 50 cents on the day it debuted, and then it ran. And I was like, these IPOs are kind of like, and then Beyond Meat totally caught me by surprise. And I was like, holy crap, that one went from like 60 to 150 over like 2 weeks. And I was like, wow, okay, well, what are the big IPOs coming up? And the ones I kept coming across were Palantir, which ended up being a direct offering, and Snowflake. And between sort of the first batch that put the whole strategy on my radar until those, we had like Lemonade, which did really well. We had Big Commerce, which was my first, like, I made 5 figures on that trade. That kind of got me into it. And then I wrote the initial Reddit post that got a ton of feedback and encouraged me to sort of create the community that became IPO Warriors. So Stripe is at that level. This is one of those where, you just play it and you expect that everybody who trades stocks and is looking for the next hot company is in on this. And I kind of expect this one to be higher float, to run for about 20 to 30 minutes, a bit like we saw with Coinbase, we saw it with Snowflake, we saw it with Rivian. These massively popular IPOs tend to kind of run up for about 20, 30 minutes, then drop back down, and then barring some unexpected share offering like Coinbase did, or just purely overheated at the moment in relation to Bitcoin pricing, we then see that kind of day 2, day 3 media cycle pump these back up. And Stripe for me is just one that I would love to own it anyway. So I think everybody wants this one to go public, and everyone will be buying it when it goes live. Okay. The next one is Plaid. Plaid. This one is pretty solid. It's used in just about every trading app to connect your trading account to your bank account. And they do this for a lot of, apps. It's used by Robinhood, Webull, I believe, uses this. E-Trade, I believe, uses this. And it's kind of the leader in innovation. It's being called open banking, which is kind of the ability for banks to openly kind of communicate with each other, with apps, with other systems. And the total addressable market is estimated at over 400 billion. Their current revenue is just in 2020 anyway, was 170 million. So that there's a tremendous opportunity for growth here, with 60% year over year growth in 2020. We see that growth metric. And if these numbers seem outdated, remember, these are not public companies yet. We don't have S1 filings. We don't have regular earnings reports or anything. We have information that they've chosen to share with the public, estimates from analysts. And so we don't have the same information that we will have when these actually go public, which is when I'll make a more firm decision on whether to play these or not. But when you see something that's in sort of the center of the fintech trade, it's kind of the tool behind enabling bank transfers between software and the banks. You see this kind of growth. This is the kind of trade I like. They didn't turn down, but I guess Visa made an offer to buy the company in January 2020 for 5.3 billion. And the US Justice Department said, no, Visa, that's you being too involved with everyone else. So no go.
Yeah. It's funny. When I saw that, it was a bit of a surprise. But anyway, Plaid is also this would be a great company if they would ever go public, which who knows, but
it's definitely what I would look for. I kind of organize these not strictly, but you're going to get the ones that I'm most excited about at the beginning here, and the ones that
just to be clear, these are not like scheduled IPOs. They
might not IPO, they might get bought out, they might take till 2023 or never go public. We don't know. Some of these are rescheduled.
These are on Matt's wish list.
Pretty much, yeah. The ones at the top are on my wish list. The ones at the bottom are kind of, avoiding the losses, especially bad losses, are just as important to the strategy of stringing together a series of wins as identifying the winners to go big on. Cool. Epic Games. This is one we touched on last week. This one will probably do really well right now. The metaverse, Fortnite is positioned as one of these kind of contenders for being the metaverse itself. It has 300 million players, which when I see these numbers, I'm like, that's like almost the population of America. $5 billion in revenue, 22. But what also, even if Fortnite for some reason became less popular, they have the Unreal Engine. And there's basically two gaming engines that power about 90% of the kind of premium level games, and those are Unity's Unity Engine and Unreal Engine. And from my research that I did into Unity Engine, Unreal Engine actually seems to have better kind of graphical capabilities and is in some ways more powerful than Unity and is used by more kind of high-end premium gaming companies. So you've got the games that Epic Games makes themselves, and you also have Unreal Engine, which is kind of also a tool that the metaverse would, potentially be built out of. So recent funding in April 2021 valued the company at $28.7 billion. Has a huge, brand name recognition. Its products kind of rival Roblox, which did really well and has recently run up quite a bit. So this is one of these plays where if it debuts in the next couple months, which doesn't really sound like it would be very ripe timing. Who knows where what the market's focus will be on, say in the middle of the year or end of the year. If it takes
it's worth noting that I think Tencent owns Epic, so, or at least they own a stake. Maybe they don't own the whole thing, but they definitely own a piece of Epic.
Okay,
so there's that.
Good to know. I think Tencent also has a partnership with Roblox to distribute Roblox in China if they ever get.
I believe it. Tencent they have their tentacles everywhere. So
interesting. We've brought up Chinese stocks, a few times here, and it does seem, and I've said, at least for the last 4 or 5 months, like I just can't touch them. It does seem that with the recent announcements from the PRC saying that, hey, we're going to allow Chinese IPOs, but here are the rules that you need to follow, that things might have bottomed out a little bit here. I still think they're incredibly risky in other plays with less potential to get completely wiped out. But for people who have been on the sidelines and really want to take part in some Chinese IPOs, this might be the time, the turning point. We saw Friday, things, I think almost across the board, Chinese stocks were up 5, 10, 15%. So I'm starting to kind of look at a couple recent IPOs. One that I like is LIAN. They own the distribution rights for all of Pfizer's drugs in China and have yet to actually go through the entire certification process to bring those drugs. But bringing Western medicine to China is going to be a pretty huge business. And they have Pfizer and one other company, I forget which, a major pharmaceutical, where they have the licensing rights for those drugs in China. And I believe it's just a matter of time before they've pushed through a few drugs and start to realize, profits on those relationships. And I'm looking for a bottom on that one to possibly play. But all the anything that you like, Alibaba, Baidu, Tencent, now might be a time to take a bit of a high risk, in my opinion, but re-entry position on those. Anyway, bit of a tangent there. Databricks. We continue the trend of strong names in data and analytics. Databricks is an all-in-one platform for cloud data, AI, and unstructured data analytics, which is 3 of the kind of buzziest data-related words, buzzwords that you could come up with. They've kind of coined this phrase data lakehouse, which is a little bit of, I guess what they're referring to is taking raw data house and then structuring it in different warehouses, and then they provide all the software to analyze and visualize that data. And they connect with Snowflake, they connect with Google Cloud, with Amazon, and they have grown at a pretty rapid rate, something like 75% year over year growth. They're used by over 5,000 customers in over 12 countries, used by over 40% of Fortune 500 companies. They have huge institutional backing, including BlackRock. They raised $1.6 billion in August 2021. So their valuation is currently $38 billion. And that's on revenue projected about $1 billion. So it's a pretty high revenue multiple still. even for a growth company, but sort of in line with Snowflake. So, if the revenue goes up a little bit above that, it's pricey, but this type of IPO has been very solid recently. We just kind of have to see how 2022 treats these high growth IPO debuts. My guess is that whatever the first kind of handful of IPOs we see this year are, we're going to get actually pretty good pricing as retail traders. The trend has been that when the market is kind of cooled off a little bit, IPOs debut at a lower premium. So we actually, as retail traders who don't get to buy the actual IPO, we get more attractive entry points on the retail debut than we do when, say, the market is super hot. And a great example is Bumble from February 2021. The market was super hot in February last year. And Bumble, the IPO price was like $36 and it debuted at like $76. It even had room to go up a little bit for a day or two, but very quickly started retreating and receding. And I think now it's at like $35. So when I'm looking at a debut trade, I am looking for kind of the hype and media cycle to push it up for a day or two. And something like Databricks stands a good chance to do that no matter what. But when you think about maybe holding these a little bit longer, is usually when the market has already decreased a little bit. Then you can get in, hold it. A great example of that one was Global E, GLBE, debuted in a pretty cold market. People didn't really know what it was. It debuted at around $25 and ran up to like 70 or 80, maybe higher. So I'd like to see what the market conditions are like for this one. It's one that I would otherwise like to hold, but not if the market's super hot and the debut is super high. Okay, Automation Anywhere. This is cloud-based robotics process automation, RPA, which the TAM on RPA is projected to be $50 billion by 2030. So it's a high growth industry. And we saw UiPath, the ticker is PATH, did really well off the IPOs. Cathie Wood favorite. Since kind of pulled back quite a bit since the inflation and interest rates have kind of compressed the valuations.
That's a doozy of a chart right there.
Yeah,
so
it's pulled back.
You had a month, but yeah.
Yeah, it debuted at something like 64, and then ran up as high as like 80 within a couple days. Yeah. Pulled back, then ran up to 90, and then it just started bleeding out. Lockup, expiration, earnings. It got hit. So Automation Anywhere was something that if you had asked me right after Path, I'd say, oh yeah, can't wait for Automation Anywhere. Now I'm saying, well, we'll see. This one, I guess, is a little bit bigger than Path, maybe a little bit less AI driven. But again, if Path rallies, then this one could do well. If it doesn't, this one might be something where people go, it's nice, but I'll wait and see what it does. And a lot of these that we see kind of in this middle to lower tier pack that I'm about to show you guys have comps to things that make you go, too bad this wasn't a year ago. And we'll get to some of those in a minute here. First, we have some fun ones, though. Reddit. So if you haven't heard of Reddit, I don't know where you live or if you even have the internet. But popular social media platform. Okay, if you heard about Wall Street Bets, I'm sure just about everyone has. They pretty much single-handedly almost wrecked the stock market and broke the internet, and are credited with the GME and AMC squeezes, and are probably somewhat influential in the prices of companies that are completely detached from financials like Tesla and maybe Apple. They tend to kind of get behind a stock, and no longer is it like trading in any kind of coordination with financials. It's just now become a tulip bulb or a cryptocurrency. And when you look at Reddit, it's the kind of thing that could just become a meme of its own. And if everyone who's in Wall Street Bets just goes, hey, Reddit's IPOing, let's all just have fun with this and buy it. Really could
I gotta say, crazy. So like I've been on Reddit for maybe 8 years now. And it's one of the few social media platforms that I probably am addicted to. But I really don't know how to feel about Reddit as a trade. You can trade anything, but as a longer term thing, I don't know. I guess I'd have to look more about it. And they did file their S1, correct?
I believe they have filed because we can see their
Yeah.
revenue and their
Right.
revenue for
Okay.
Q2. They've released a little bit more information. There was some rumors that they would go through a SPAC, but I think unless I think companies are not going going the SPAC route unless they need to for the most part. Of course, every CEO that does a SPAC says, well, we could have done an IPO, but we just felt that this gave us more certainty,
Right.
blah, blah, blah. I don't think that's true. I think that when a company can attract institutional investors through an IPO, they would rather do that than go through a SPAC. Doesn't mean quality names haven't gone live through SPACs, but you go back to kind of the original SPAC of DraftKings. It was kind of like, well, DraftKings is really sports gambling, and maybe they would have had a lot more scrutiny. And I think SPACs kind of tend to follow that path, or at least there's this, I think it's more than just a stigma of them. And there are SPACs that I really like. But I do believe that Reddit, if it can do an IPO, will add credibility to it. The revenue and their growth is kind of ridiculous recently. Some of it's just, it's become its own. I mean, for a site that promotes memes, it almost is like the meme stock. But for a long-term hold, I don't know. For an IPO debut, I wouldn't want to miss that ride. I just believe that the likelihood that Reddit trading groups all discuss Reddit's IPO is about as close to zero as possible.
It will be crazy. It will be crazy. It'll definitely be like the weekend IPOs would be the biggest IPO of that week for sure. Maybe even of that month, just in terms of just social chatter.
Exactly. The buzz would be. We're going to rip through a few of these here. Discord, great numbers, great growth. Microsoft tried to buy it for $10 billion back in April 2021. Their most recent valuation based on fundraising was $7 billion. So its growth, it's where everyone. I don't know what the percentage is, but a lot of Discord is either gaming or trading. So when you have a user base that's largely retail traders, I don't think it'll be as intense as Reddit, but I don't think it will get ignored either. So I'd like to play Discord, especially if it's kind of a low float and a reasonable valuation. Airtable, this is one of these ones that I do like. I know a lot of VCs and tech people in the Bay Area where I'm from have been talking about this one for years as being the next really big thing. It's a low-code.
Can I give you a scoop? Can I give you a scoop?
What's that?
Benzinga is pivoting to Airtable as well.
There we go. See,
it's
the thing behind the thing. The thing behind Benzinga.
We use HubSpot, we use Asana, we use Salesforce, but we're pivoting all that to Airtable. Like we're in the middle of doing that right now. So
yeah. So I like this one. It's kind of like in some ways under the table or
pun intended. Boom.
Yeah, I did not mean that at all. But it is, it is something that I think VCs like it. I think institutional money likes it. It is, like you said, the thing behind the thing. People like it. So I probably would move this up the list a little bit. But this one I like because I don't think it'll get too overhyped before it debuts, which makes it a nice IPO pickup. ThoughtSpot is sort of in that same category. This is a visualization tool for analytics and AI. One of its investors is Snowflake. The growth is really high. T-Mobile and Verizon, among a bunch of other SaaS clients. They have transitioned, or they're in the process of transitioning from really like an on-site consultancy to a SaaS model, which is going to make their numbers look kind of, their growth numbers are going to look kind of ridiculous. But the CEO came out and said, hey, we're not going to go public until we've really established ourselves as a SaaS, because the valuations are just, instead of 3 to 5 times revenue multiple, we could be looking at like a 20 to 30 time revenue multiple. So it's an interesting company. It's in the right space, and I like this one. Chime. This is
Chimes. They're on these lists every year. They're never going to IPO. Calling it
Chime, it's a, this is one of those that sounds sexier than it is, in my opinion, a little bit like Nubank. No, I mean, look at Nubank. Nubank, everyone was all hyped about it. It came out with a huge float. It went from $11. It's at like $9 or $10 now. They make money on merchant fees. It's like, it's e-banking, it's digital, fintech, everything. But ultimately, they make money off merchant fees like all credit cards do. And they're moving into microloan services. So a money lender, and it's still a bank. And, yeah, it does have really strong growth. So maybe it gets more than that. But I would really need to see, and it is EBITDA profitable, which is something I like to see. But again, we need to see what is the float, what is the valuation? Are they going to come to market with 150 million shares? Like, okay, well, probably not that interesting to me. Are they going to come to market with 15 million shares? I'd be like, okay, I'm listening. So this is starting to fall into that middle of the pack where I'm looking really at the conditions around the IPO before I would say almost everything on above this one in the list that we've gone through. It's kind of like, look, there'll be more demand than supply. I'll play it. Now I'm starting to get into really having to dig in and say, I need to see what things are like when this debuts. Mobileye. This is Intel's autonomous driving unit, software on a chip, robo-taxis, safety systems, and more. It's a huge division within Intel. What I've heard on the street is Intel needs to raise some money. Mobileye is, something they bought in 2017 for $15 billion. They think they can bring it to market for about $50 billion. So, it's got a solid growth numbers, 40% revenue up. It's got 100 million units shipped of its IQ software on a chip. It's used by over 30 global automakers. The only thing I don't like about this is that it is a spinoff. And spinoffs, almost every single one that I've ever watched has dropped as soon as it starts trading because people are just selling it. And my play on this
but this is on the other hand though, Matt, this is like a sexy name. When Intel bought this, I mean, this was like a sexy stock. And it still is a sexy business. So
the question we have to ask when it debuts is, for the first kind of 10 minutes, are there going to be more buyers or sellers?
Yep.
And so far,
probably sellers.
More sellers. So for me, I've played a couple spinoffs. One of them was Vimeo, and Vimeo just tanked. It tanked for about 10 minutes, and then you could buy it and it rebounded, but then it kept tanking. So I think
did we lose Matt? Oh,
we'll give him minutes.
Oh no, wait, Matt, we're back. Okay, we lost you for a second, but we're back. We got a couple minutes left, Matt. So let's race through the rest.
We're getting towards the bottom here. All right, Instacart, grocery delivery platform. They have like an incredibly large share of the market using Instacart compared to its competitors, but I still feel like competing with Uber, Amazon, and others is a race to the
Okay.
with the retailers, but the retailers have no incentive not to use everybody. And, DoorDash has gone up and down and up and down. But it just seems to me like until a couple of these consolidate, I don't know, how, they just kind of are going to be screwing over. They're not loved by the restaurants and grocery platforms. They're not loved by the delivery people. And people just always complain about, there's nobody delivering. There's a lot of complaining going on from all sides, and they don't have a huge moat. There's nothing really keeping someone else from dropping their prices a little bit more and being where people prefer to shop from. Klarna, this is kind of a buy now, pay later. It's similar to Affirm. And a month ago or 2 months ago, this could have IPO'd and been a blockbuster. Now, Affirm has come out and said, well, we're having a little bit of trouble getting people to pay for what they bought. And Klarna is kind of the same thing with the gimmick of, hey, it's 4 payments. So why 4 payments? Why not 6 payments? Why not 10 payments? They do have incredible growth. People like to pay later. But
I don't know. I don't know about buy now, pay later right now. I don't know.
No, I agree. I'm not super hyped about it. It just seems like people who can't afford to buy things,
All right.
things.
Is there anything else on this list? Impossible Foods. Oh man. Okay.
Again, a year ago they debut, and this is a monster, monster runner. Beyond Meat has pulled way back, and even if Impossible Foods is the bigger, better alternative, anything, and I'll skip to this one at the same time and put it in the same category. iFit is the largest provider of, it's Peloton. So a year ago, these are monsters. Now I think people are going to be like, workout equipment. I don't know. I don't see the reason to try.
We got to wrap it up. This was a pretty all-encompassing list.
Sure.
Matt Hammond.
I'm gonna send out a newsletter. Sign up at IPOwarriors.com. It'll go out in a few hours. I've got to wrap a few things up. That I think we covered most of what we wanted to cover. The stealth IPOs, I'll cover those as well.
Alrighty.
That's
all right.
Forward to
Have
next
a
year.
good one, Matt. We'll talk to you again next week.
Cool. Thanks, guys.
All right.
Cheers. Bye-bye.
Now is the time that you all have been waiting for. Where's my wide angle? There we go. We've mentioned this. We've teased it. It is here. The number one trending stock of the day is Immix Biopharma, ticker IMMX. We have their chief executive officer, Dr. Ilya Rachman, joining us right now on Benzinga Live. He's here backstage. I'm going to bring him on. Should I just be like totally mean and just be like, yo, you got to hit the like button first? Nah, I'm not that mean. But if you want to drop us some likes, that'd be cool. Let's bring Dr. Rachman on now. There he is. Dr. Rachman, can you hear me?
Yes, I can hear you quite fine. And again, thank you for having us.
Thank you for joining us.
Thank you to the entire Benzinga team.
Happy New Year to you too. So I'm going to do my best to explain the news, and then I want you to correct me if I'm wrong. Sound good?
Sounds good.
Okay, so as I understand it, Immix Biopharma, you have this drug, right? This IMX 110, right? That is your drug that treats a very rare form of pediatric cancer. And that drug received a designation today from the FDA, a significant designation, the rare pediatric disease designation, RPDD, which basically qualifies your candidate for fast track review should it get through the trial process. Did I explain that correctly?
That's correct.
Okay.
Good job, Spencer.
Thank you. So I've been practicing for like 4 hours. So what is the significance of this for you?
So as we indicated in our disclosure, the significance is that upon receiving regulatory approval, this puts us in a position of entertaining both monetary value as well as partnership opportunities, as according to the current regulatory disclosures and current regulatory regulations. So this clearly provides additional opportunities for us and represents tremendous value for us as a company, in addition to the validation of this technology that we've been working on, the tissue-specific therapeutics and our smart tissue-specific drug development platform.
I would love for you to just explain that RPDD, that rare pediatric disease designation, because obviously at the end of the day, it is an incentive, right? Because the government has to incentivize a company like yours to devote time and money to treating a disease that is a pretty narrow disease in terms of scope. So can you just explain like the RPDD and just sort of like what that what that means and why it exists?
Sure. Just to echo what you just mentioned, historically there have been difficulties in incentivizing and motivating companies to develop therapies for smaller population, pediatric population specifically. So in my understanding, in order to incentivize the drug development folks to focus on these much needed diseases, high unmet need indications, they've come up with a regulatory schema to provide companies the additional motivation to do this. And historically now, over the last several years, there have been indications that these vouchers that they've put in place, this regulatory pathway, ends up, assigning value to these vouchers in the range of 65 to 350 million of them being sold among companies or traded among various entities. In the most recent GAO, Government Accountability Office report as of January 2020, the range of these transactions for this PRV, or the pediatric vouchers, ranged between 65 to 350 million dollars.
So you've got this voucher, the one, and oh, I'm sorry, I didn't mean to interrupt you. Go ahead.
No, go ahead, please.
Well, I was just going to ask, like the vouchers. The key thing here is that even if your drug, your candidate, right, IMX 110, even if that does not proceed to a phase 3, for example, the voucher that you got today still has value. So
the voucher value is dependent on us advancing this into the phase 2 and phase 3, and the voucher, the RPD designation puts us in a position of eligibility to receive the PRV voucher. So that's why we're so excited. As we continue our development, our clinical development, this puts us in a position of obtaining this PRV that has been valued at the ranges that we just mentioned, which is in the 65 to 300 plus million.
So that's a really big range, right? 65 to 300. So what determines where you would fall in that range?
In my belief, clearly, this depends on overall market conditions, where the industry is at the moment, what the investor perceptions are. But again, I think we are going after huge markets. We have interesting inflection points, which this also depends on. And these are the two key points, that two inflection points. And this is just a small part of where we're taking this company.
What can you say as far as upcoming catalysts? Do you need to actually, no, let's just start there. As far as the timeline here for the actual drug, which is at the core of this IMX 110, where are you on the timeline? When can we expect news?
So with respect to that, I have to refer you to our disclosed documents filed with SEC. We are sticking to the timelines, working hard to meet them. We believe that we will have pretty much timely hitting those milestones. In addition, I want to comment that we will have rolling readouts from our upcoming phase 2 with IMX 110 as a monotherapy in soft tissue sarcoma, and in addition to the combination trial with a PD-1 from Beijing Novartis. So we are looking forward to a very exciting quarter, and the time thereafter.
And then as far as your cash position, how is that? Are you going to need to raise money going forward? These are obviously very expensive drugs.
This is a great point you're bringing up, and I want to emphasize that with the funding that we've raised, we've actually aiming to hit those two inflection points over the next 18 to 24 months without needing to raise more money. So the phase 2 data with in soft tissue sarcoma is a monotherapy for IMX 110, as well as the combination with phase 1B data with PD-1 of Beijing Novartis' PD-1.
Okay, so just to repeat what you just said, you said you have no need to raise money for the next year.
Precisely. And the funds that we've raised will put us in a fantastic negotiation position with some of the players I mentioned, and in addition to Beijing Novartis, some other players as well, because we're going to be in a position to entertain opportunities as the data becomes available with the funds that we already raised.
And then I know you said you would refer us to the SEC filing, but just as far as the timeline on the IMX 110, can you give us a ballpark time? Is it this quarter? Is it next quarter? Is it Q3, Q4? As far as when, because right now you're in the phase 1, correct?
We're phase 1B with IMX 110.
Right, phase 1B / 2A, right? So when do you expect to see results from that?
So the phase 1B, again, rolling readouts. We'll be finishing up the study this year. then launching our phase 2 with single therapy with IMMX 110, which will again be providing ongoing quarterly readouts. In addition, we will have preclinical stream of data coming out from our downstream candidates in again larger indications: IBD, inflammatory bowel disease, and colon cancer.
So I want to ask you this question.
Pretty packed calendar. Go ahead, Spencer.
I want to ask you this question. I mean, the move today is obviously insane, right? You know, we're all seeing it. The stock's up 100%. You guys traded over 100 million shares. Does that seem justified to you?
So this is not insane. We think that this is the beginning of the validation where a market, which are smarter than us, begins to understand the potential, the technology, and what we represent. And this is just a tiny percent of our value, because the investment community is beginning to sense not only the market sizes, but the potential of the technology, the advantages, and the competitive edge that we represent, and how quickly this could be deployed to multiple high-value indications, and how much benefit this could bring to clinical communities as well.
Well, but it would seem like to me, that like most of the move today is attributed mostly to the possibility of you getting that voucher, right? That PRV, right? Which you haven't gotten yet. So that to me, it seems like the move is more about that than it is about anything else. Like even the underlying, right?
You raise a great question. I would also tend to extend that rationale to look. This designation is a continuation of our prior already obtained orphan drug disease designation. This is the continuation of the understanding and the investment community's perception of the opportunity and the value of smart drug development platform, as well as value of tissue-specific therapeutics. Look, this company has been shepherded by Mesa Verde Biotechnology Venture Capital Firm, which is a biotech specialist founded by a founding CFO of Genentech. This company has been shepherded through clinical development, advised by some of the leading oncologists in the world. And now all of these factors, in addition to the RPDD that was just recently announced, is sort of just the most recent capstone. But I think all of it together now presents as a coherent picture of what is ahead of us and what is ahead for us, and the promise that this technology represents. So not only do we believe that IMMX 110 will become a market leader in soft tissue sarcoma, which is a $3 billion market today, we believe that this will expand very quickly to other indications as well. I think that's what market is reflecting today.
Just to wrap it up here, because I see we got a lot of questions in the chat. We can't get to all of them, but this one I thought was interesting. So I'll ask it from I forget who asked it. Was it? I don't remember who asked it in the chat, but someone in the chat asked it. Can you explain exactly what makes the drug different than what is already out there? Because we're talking about pediatric cancer, and your drug. The market for your drug is not particularly large. We're talking 20,000 kids a year, right? In new cases a year. What exactly is different about this drug?
So this drug was a product of the SMART, what we call SMART drug development platform, which spins out this tissue-specific therapeutics, which allow us, unlike anything on the market in our belief today, to effect what we call tumor microenvironment normalization, or TME normalization. So think about flipping the established paradigm of a single mutation, single drug on its head. Think about going after the entire tumor system. So you're thinking about not just cancer, but cancer-associated fibroblasts, tumor-supportive immune system, all of these things being attacked and switched to anti-cancer proponent. So we're severing the lifelines which provide the sort of life-sustaining support to cancer. And as you cut them, you're able to then kill the entire system, not just provide with the cancer with temporary relief, or patient with temporary relief when the cancer has a chance to come back. So this is a very different and unique approach.
We will be anxiously waiting to hear word on the phase 1B trial results later this year. Dr. Ilya Rachman is the CEO of Immix Biopharma, ticker on the screen there, IMMX. Dr. Rachman, thank you so much for coming on very last minute. I'm sure you've had a crazy day, but thanks for joining us today on Benzinga.
Great. Good to join you. Happy New Year, everybody.
Happy New Year to you as well. All right, guys, if you liked that, I know we couldn't get to all the questions. If you liked that, the least you could do is drop us a like, right? I mean, it's the thumbs up button. It looks like that right on your screen. You just hit that, and then it tells YouTube that you like us, and we all go home happy. So,
yeah, great job with that, Spencer, because a lot of that stuff in the biology medicine space kind of goes over my head. But great work by that team. You know, hopefully we get some bullish news on the pediatric cancer front.
Yeah, look, and we can never get to every question. I know there's a lot of questions in the chat. We can never get to them all. I apologize. I know we got to several of them. I always do my best to balance questions from the chat with like questions that we have, and questions that our news desk has, right? So I do my best to balance it. But thank you to Dr. Rachman for coming on today. It is 1:02. Let's bring on the chart master himself,
Mr. Jake Wujastyk from TrendSpider. Without further ado,
where's he at? Where's he at?
All right, I'll take it.
Hey, how was you took the week off just like me, man. How was your time off?
It was great. Still worked, just kind of laid low a little bit, getting ready for the new year. So hopefully you guys had a great new year and ready to see what 2022 has in store.
Got some big plans for TrendSpider?
Yeah, always. A lot of cool stuff coming out this year, and definitely check it out as it comes out. TrendSpider on Twitter, our company page, is where you can pretty much find anything that comes out immediately with in regards to new features and that type of thing. But we definitely have some good stuff coming.
Should mention, if you want to get a discount on TrendSpider, just enter the code on the screen, BZ25.
Yes, sir.
25% off. All right, let's bring up TrendSpider. Let's do it right now. And what are we looking at? This is the SPY, of course. Jake.
Yep. Let's
always starts off with the SPY. So,
yeah, and you know, some people like to look at the broad market. Some people just like to look at individual names as kind of looking at, you know, each stock individually. But for me, at least, I get a little more confidence looking at the broad markets versus individual names first. So SPY is looking pretty good to me. The one thing I'll mention here is just we do have a little bit of supply right here. So this little volume node and a half really highlights that we do have a little supply to get through if we want to break above to new all-time highs. So you can see we tried to do that this morning, but we've had a little trouble getting above that volume node. And what's interesting is going into 2022 in January, I think you're going to see a lot more volatility and big moves in individual names rather than the indices themselves, because you did have a lot of tax loss selling that went on over the last 6 weeks or so. And so I think some of those beaten down names are probably going to take the light there and really have some pretty big moves into the coming weeks. So that's kind of what I'm eyeing. That's my thesis, the January effect thesis going into the next, maybe the whole month. We'll just have to see what price action does. But for now, SPY is looking pretty good, holding the previous all-time high resistance, potentially acting as support as we go into the rest of the week.
And Jake, 1 second, I wanted to kind of back up for a second. You know, we may have some new viewers with us right now. And before we get into the charts, I wanted to just kind of go over your charting style, because I know even among, you know, people that are into technical analysis, people kind of have a different style. Like, what are we looking at on the right side with the volume profile and all that? And then we'll go ahead and get into the charts. Yeah,
definitely. So I get this question a lot, so thank you for bringing it up. So I'm I'm looking at where has volume aggregated since a specific point in time. So if you see this vertical dashed line, I can move this. So if I want to know, since we bottomed in around December 20th, where is a majority of volume holding? You can see a majority of volume has occurred since the December 20th low, right around where we're trading at right now. So this is a lot of volume supporting price up here. But if you pull it back, maybe we want to know, since we hit the all-time highs in late November before Thanksgiving, where is a majority of that volume holding? Then you'll see there's a lot of volume holding a little lower here. So it just tells us where are people break even? Where are they holding at a profit? And that is really what the volume by price tool is used for, at least for my style. And instead of looking at volume as a function of time, you'll see each one of these bars represents how much volume occurred during the day. These bars on the right are just measuring how much volume occurred at that price range since the anchor point. So since this point in time on November 22nd, where has that volume occurred within the price range? So I like to generally anchor this from the swing low. The only thing here is we've only had about 8 or 9 trading days. So, I generally like to pull it back. If I'm using a trend or a horizontal zone, I like to maybe start it from the start of that zone. So in this case, this zone, this red area, is being started from the 22nd of November. So that's where I'm measuring the volume from. So there is volume supporting price up here. If we didn't have any volume here, that would be a little concerning, because we know there hasn't been a lot of activity as far as volume goes supporting price at this current level. So it's a big part of my strategy, but there are other things I use. For me, mostly trend zones, whether that trend zone is a horizontal level or a diagonal zone, volume by price, anchored VWAP, and I do like to use raindrop charts to get an idea of where volume has occurred within a specific range for the day or the week. And we'll probably touch on those at some point when we look at some more charts.
Got it. Yeah, thank you for coming to giving us an insight into your charting strategy. I think it's always helpful. Again, like even people that are big in the charting world sometimes have different strategies.
Yeah, absolutely. And thank you for the question. I think that was a great question to kind of, as we get into more charts. Now, something I also look at quite a bit is simply just the amount of days something is green or red. So what's interesting here is, notice we've got this kind of this bull flag forming here on the Qs on the daily chart. And notice the last 4 days have been red. So generally, if you've got 4 red days in a row or 4 green days in a row, what I like to do is just add what's called the pattern indicator. So all you have to do is type in 4 red candles. Click on it, apply. And anytime there's been 4 red candles in a row, you'll actually be able to see that on the chart. So when I was looking at this chart over the last day or so, I was like, well, generally you don't have a lot of 4 red candles in a row occur without at least some type of bounce. So one thing to keep in mind, at least for now, a solid gray candle will count as a red day, because if you're familiar with hollow candles, if it's a solid gray candle, that means that it closed above the previous day or week, whatever time frame you're on, but it closed lower than the open. So the system will count that as a red day. So there are some times where you have to go and filter it out a little bit, but at least for this one, you'll see you don't have a lot of red days in a row. And generally, like here, this was the August move down, but notice here, at least for my filtering, it wasn't 4 red days in a row. You have this solid green candle up here. So there's really not a ton of times it's happened. And if you look back, generally, let me get rid of some of these things here. Generally, anytime we've highlighted this area, you generally get at least a short-term bounce. And a lot of the time, like here in November of 2018, we were in a downtrend. We were hitting lower highs, lower lows. In this case, we're in an uptrend. And, this to me just shows that and the thing is, notice that these 4 red candles in a row happened in a pretty tight range. It's not like we waterfalled with 4 red candles in a row. So to me, this looks like just basic consolidation for the next leg up. So we do have a green candle right now. You got the flag. We'll see if it follows through into the rest of the week. But as I mentioned, the individual names are really what I'm paying attention to right now that have gotten beat down over the last literally months, but especially over the last 6 weeks. But yeah, IWM is always one I have to check too on the broad market side. The main thing I'm watching here is the fact that we actually, if we closed here right now and the market closed, we would have a close above this anchored VWAP, which we have not had, and really a majority of the range being above this area for quite some time. So this is a pretty strong setup for me. You've got the gap above. IWM is telling me that risk is on in the market for now, and we'll have to see how it closes. I mean, we still have 2.5 hours left in the day, so this daily candle can change quite a bit. So what I was thinking about doing was we could either go through a few names that I'm looking at, or if the chat has a few names that they want to look at, however you guys want to do it. But there are a few names that I'm kind of personally watching. Some of them I'm in a trade. Some of them I took some profit this morning. But PayPal is one that I think is
Yeah, I was gonna say, I saw on your Twitter you were tweeting about PayPal, Disney. So let's go through those first, and then Zinger Nation out there, if you've got some tickers, drop them in the chat, and hopefully we'll get to them.
Cool. So yeah, PayPal is one that I've been trading this one kind of back and forth, as it's pretty much just traded in a pretty tight range over the last month and a half. And then finally, you can see here that we're moving up along this anchored VWAP from the earnings gap. So the anchored VWAP is just saying, what is the volume weighted average price? What is the average price for every share that's been traded since this point in time? And you'll see that initially we kind of broke it a little bit and then pulled back. But since then, we've had multiple times where we've moved right up along this line, but we've not been able to break it. So if we can finally break above this anchored VWAP, I think that is going to open the floodgates for a huge move to 200 plus. You kind of have the price just compressing for the last literally 2 months. And I do think that eventually when this thing moves, it's going to have a huge move. You've got all the ideal setups that I look for. So if we're looking from this previous swing high here up here from October, notice a majority of volume is holding here. So you kind of have that base being created for PayPal. And so if we broke above this VWAP from that earnings gap, I think that's going to bring in a lot of buyers. And not only is it if people don't use VWAP, they just have to use horizontal levels. So if we break this previous area that's acted as a horizontal level for quite some time, that's going to bring in your price action, just price level traders. So the more setups and the more signals that this thing is giving, the more participants will come in and trade it. So we're not there yet. I did take some profit on this one, but I still have a pretty big position. I'm in the February $200 calls as well as the 210s. And it just has that look. We'll have to see if we break above this area. That is the main thing that I'm looking at. Disney's one that I had a position in. I did take profit on the spike today. Disney sometimes just has trouble holding its moves. So this one I had plenty of time on, but I also saw it go in profit to red last week, and I wasn't going to make that same mistake this week. So I did take the profit, just focusing more on the PayPal trade. The more trades I have open, the easier it is for my emotion to get, transferred over from one trade to another. So if I just have a couple trades open, I can really focus a lot better. And I figured this one was a good win to start the year. Take the profit. We'll see what it does the rest of the week.
Beautiful. All right. Moving on. Do you have more on your end, or do we want to go ahead and get to some from the chat?
I mean, there's a couple other beaten down names. Fubo, this thing just is probably one of the more frustrating names to watch, but there are times where it makes sense to trade it. So I took a trade on it a week and a half ago, sold as it broke down. I still have a long-term position in it, but I do like to trade around the core. The main issue here is the fact that you can't get over this huge volume bar. So this volume bar is pretty much telling us there's a ton of shares holding from around 1650 up to around 1725 or so. And as those shares get back to break even, that's going to add supply onto the market because people are like, well, I've been holding this thing for 2 weeks. It hasn't done anything. I'm going to take my money and put it in Tesla or something else. So until we can break above this, what is this? Right around, I'd say 1725 and close above it. It's just one on my watch list for a trade. I'm not trading it or anything like that. Penn, this one, I know we've gone over this one a little bit before, and it probably has scarred a few people the way it trades, but same thing here, kind of keeping an eye on it. You do have a little bit of an inverse head and shoulders playing out here. You've got quite a big volume, what I'd call volume shelf, where you've got the point of control, but you also have another volume node that's pretty big here, highlighting there's a lot of shares holding here since this October 20th high here. And that's where this anchor point comes in. So you can see here, for now it's holding, but not the best look when you go pretty green to very red intraday. So what
would it take on a chart like this to get you really excited and say, okay, this is setting up for a bullish trade?
Probably a break above this area, just this horizontal level that's acted as resistance, multiple times and today. So I wouldn't even really take this trade until we can get above, let's say 53 or so and close above it. And then I would also always look at the weekly chart. So not my favorite setup. You kind of have this range bound last 2 weeks here. You had a big move up, but then you kind of pulled back and closed a little higher. Not what I'd call an ideal setup. So for me, I'd need to see a stronger weekly setup. I'm more of a swing and position trader, so I'm not just looking at one time frame. I'm looking at multiple time frames to kind of get a thesis there. But for me, weekly chart would have to look a little better, and we need to close above, I'd say closer to 53.50 with with some volume coming in on that breakout to get me excited.
Got it. Yeah, I mean, this is one that we get a lot of interest from our retail investors. Just Penn is always, kind of since I think when the COVID crash happened, Penn got all the way down to $6 or something, and it's come back obviously tremendously and is now trading off those highs. But I see you pulled up DraftKings. Let's take a look at that.
Yeah, DK and G, they kind of are grouped in the same stock group. Interestingly enough, this is up almost 2%, where Penn is down for the day. You have a little bit of a descending triangle forming here. Generally, that leans bearish, but if you do have a breakout of a descending triangle, it can be a very big breakout. So when they do break to the upside, they break pretty hard. Baba is a good example of that last week. So one I'm keeping an eye on, but this is another one where it's almost like a no trade stock for me. I've been chopped up on this one, and I have other names like PayPal, Disney, that have definitely paid better over the longer term as I trade them pretty consistently.
Got it. Yeah, I mean, I don't know if you have any spaces or industries as a whole that you're really excited about for 2022, but I know kind of this gaming sector for me is one that I'm going to be watching. Because like you said, just some of these names have gotten so beaten down that if we start seeing some buying coming in, then it can make some of these names tradable again. But yeah, I mean, DraftKings, Penn, like we're watching those. You just had Baba up before this, right?
No, I mentioned it though. Baba.
Oh, you mentioned Baba.
Yeah, so Baba on the weekly chart looks good. I definitely like this setup here. Some people hate it because, it's gone down a ton. Some people don't like buying things in downtrends, completely get that. But this does look good. I like the fact that we are kind of riding up along this previous wick. So, if we can break that previous high, I think that's really bullish for Baba. On the daily chart, you'll see here that we did have a very similar setup as we just had on DKNG, where you had your pretty strong breakout, almost retested resistance, and you've got a pretty strong day today. So Baba is definitely on the list of names I'm watching.
Yeah, me as well. I mean, I think the stock is just incredibly cheap right now as far as like long term. I was actually earlier this morning looking at some leaps, some like $200 calls that expire, January of next year. But it's just so weird because every time, I mean, what was it last Thursday? Baba was up like 10% on the day, and I thought, okay, this is we're finally turning around. We've got buyers coming in, and the next day it was down 4% again. So,
Yep.
I'm waiting for like that confirmation that, okay, we have a reversal coming, maybe a couple green weekly candles in a row before I have more conviction that, okay, this thing's turning around, coming back up to that 180 level or whatever your price target is.
Yeah. So, I mean, you've got this previous 2016 high here. It's 2015 high, acted as a little bit of resistance before we finally broke out in 2016. And naturally, it pulled right back to this horizontal level and starting to move up again. So, the January effect is a real thing. You've got these names that are beaten down, generally from noise trading. Noise trading is something that affects the price of the stock, but really nothing has fundamentally changed because people are offsetting gains and losses, and it just creates a little bit of an unpredictable cycle for the stock during that late November, December timeframe. But with that being over, people are looking for things that are beaten down, things that didn't do well last year, but still have that fundamental thesis. You've got fundamental traders probably buying this up. You've got technical traders seeing that it's oversold. So yeah, I mean, the weekly chart looks pretty ideal to me. So it's definitely on the list, but I'd say PayPal is the main one that I'm focused on, at least for now. And we'll see how the rest of the week goes.
And do you have on PayPal, I don't know if you've said this already and I missed it, but do you have like a price target you're looking for? Or are you just trying to play this move back up to the recent highs that we saw? When was it? I guess July of last year, July of 2021.
No, I'm trading options on it. So I'm in the February 210 calls. So the thesis for that is simply just looking here. So here's your swing high before your next leg lower. That is right around, at this point, around 208.50. So that's where the kind of the 210 calls come from for a target. If this thing finally takes off, I think it could probably get there in a week. But for now, it is stuck here. So that's why I took profit here initially, was because this was an area that had trouble getting through earlier.
When did you get into these calls?
So actually the day before Christmas, I initially, so Friday, the 23rd or the 24th, whatever day that was, that's when I initially started buying the 210s. And then on the drawdown, I almost doubled the position. So I think my average on the 210 calls right now is like 487 or something for February. And then I bought the February 2018 $200 calls last week, and then I sold them on that impulse move today. So pretty good, because I went pretty heavy. I had some conviction on it. So I was happy with the gain and took it. And then what I did was I just kind of added in the other position. So I just added a little bit to that on the pullback today. So the 210s and the $200 calls for February are the game plan for me, at least. But they must be up nicely today. PayPal's up more than 3% right now. Have you looked or trimmed your position at all? Yeah, I had a drawdown last week. They're definitely up now. I think they're up like 5-6%. But a lot of my process is sometimes scaling down. So I had a pretty big drawdown, added more what I was comfortable with, and then finally kind of am getting the move now. So I think this move is just starting. So that's why I did kind of add a little bit today to the 200. So I have two accounts. So like one account I'll trade a little more risky than the other. One's a cash account, one's an IRA. So I still have the IRA position. The cash account's the one that I had the $200 calls in. and just took the profit because the account hit a new high for the year or the last 12 months. So I just took that, locked that in, and then I added more $200 calls in the IRA to kind of offset what I took profit on. So I kind of like, if you have multiple accounts, you can kind of trade against each other sometimes. And that's something that's been pretty helpful for me, kind of almost hedging your bet a little bit across different accounts.
Got it. So wait, let me back that up for a second, just because I want to make sure I understand properly. So in one account, you bought the 210 calls. What did you do in the?
And I didn't sell those yet. I still have that full position.
So what'd you do in the other account to hedge that position?
Well, I had the $200 calls. So on the impulse move today, I sold them right around here when we initially popped to this area, since it's been a resistance zone in the past.
Okay.
So I took those off because it was a good gain in the cash account. And so as we pulled back to like 193, I went in the IRA account and I just started adding the dip on those $200 calls. So I took the profit, but then I started adding them back into the other account because I was like, this is way too strong for this to pull back. But I'm also not going to not take my profit in the cash account. So kind of like taking profit, but then actually adding back to the position in another account to kind of almost like not go against what I just did sold, but I think I sold at like 820 and 790, and then the 200s went down to like 740 or something. So then I started picking them up in the other account, and now they're up pretty good. So I'll probably still hold those. I mean, I like to use a line chart a lot of the time. So like, this is a very strong setup for me on the line chart. You've got this kind of rounded bottom forming. As soon as we take out this high and break above it, I think this thing's going to freaking explode. So that's why I'm comfortable holding a pretty big position in those 210s and the 200s. The cash account is all cash right now. Just if I sell in that account, I generally let myself relax in that account for a day, take the profit. And then the IRA account, I'm still pretty heavy, very heavy.
Yeah, and just because you brought up IRA, friendly reminder that it is a new year. So if you have a Roth IRA, you're able to, make your contributions up to $6,000. I implore everyone, if they're able to do that. Additionally, you have until, I believe, tax day, April 15th, to make contributions for last year if you did not reach that $6,000 mark. Don't quote me on that, but I'm pretty sure that's right. Someone in the that's correct, Spencer's saying. So new year, make those Roth IRA contributions. I know I'll be looking to this week. I honestly, Jake, we got to talk about it. You got to help me because I don't know. I in the past I've just done individual names. This year I've considered just doing some ETFs, but there are some names that I wouldn't mind just like buying now and holding essentially forever.
Yeah, but I think PayPal is a pretty good look. Like I said, I'm not investing in this one. It's just a swing trade, but this was a bigger move down than COVID. If you kind of want to put it in perspective. So this move down, and this is where you could also use the COVID low volume weighted average price. And that also is right around 210. So you've got like these different confluence zones right around. I mean,
do you know why? Like, I mean, I know other stocks with PayPal kind of trade, Square, like we saw those big sell-offs and that, but that's a huge move to the downside from, what were the highs? Like 350 down to 250. Let me get the,
so your range,
it was from
the high, it was down like 42%, but then you hit this new high in August, and it's down 42%. So, if you compare that to the COVID low or drop, that dropped 34%. So this is a bigger move down than the COVID drop. It just doesn't make sense that it's this low. So
that's right. Options Mike in the private chat's reminding me that the part of the big move down was from the PayPal Pinterest rumors, which it's always funny. Anytime there's M&A.
They did not like that.
Yeah, anytime there's M&A news, you can tell very quickly if the market loves it or hates it. And that was one that Mr. Market did not like.
And I think they had like the eBay news or whatever that they're not going to use them or whatever. I don't really pay. I just let price action tell me if the market liked news or not. And, that on top of tax loss selling, just this thing was definitely a contender for just getting blasted until the end of the year. And now I think we're finally to the point where we're probably going to make a move up as people kind of enter this one again.
Yeah, and that was a nice trial balloon for PayPal. They put that out there, and then they saw the market didn't like it. And you said, you know what? Never mind. We're not gonna, go out with it. We're not gonna acquire Pinterest. I was just kidding, guys. Can you get our stock price to go back up?
Yeah, right. But I do use lower indicators sometimes, and this is one that I do have a little bit of a lower indicator thesis on too. So if you look at the COVID low, you'll see that on the Williams percent range 8 for the RSI and the Williams percent R. I'm using 8 on the weekly to look back 2 weeks. This signal was very strong for a reversal after this signaled. So notice the RSI is just starting to peak above oversold levels. So I just think this move's just getting started. Happy to be wrong, but I am positioned for a pretty big move to the upside.
All right, and Jake, we do got to wrap up. Our time is coming to an end. I just shared your Twitter in the chat, so everyone go give Jake a Twitter. Again, we have a promo code for TrendSpider here. Sorry, I was trying to find it. There it is. Use code BZ25 to get 25% off. You can go ahead and tweet at Jake some of your charts, and maybe he'll get to them. But my last question for you, Jake, you use RSI and this stuff more than I do. When you see this, when you like on that bottom on that blue chart, when you see the RSI rising, is it, when do you usually see a reversal in that? Does it usually go up until it gets to that point where it's oversold and then it flips and starts coming down? Or how do you kind of gauge that RSI?
Well, you can, there's a couple ways. So the way I like to use the RSI is with the percent range. So notice the percent range is starting to move up very quickly. Once this becomes overbought up here, then I'll start considering, is the RSI at 50? Where is it? So I use the percent range to kind of gauge the momentum. And then I use the RSI to see, okay, this is a good example of this. When you see divergence, that's always a little bit of a red flag. So if this thing popped and then we start to see lower highs here over the next couple of weeks, that would be a signal for me like, okay, maybe this is starting to have a little bit of an inefficiency in price. So it's not like RSI hit 45, I'm out. You kind of play it by how the percent range is looking and go from there. At least that's how I use it. That's just kind of what I've found success in looking at it. But you'll always see the percent range start ticking up quicker than the RSI. So that's why I use them both together.
Well, I'll make a note for next Monday. We can do another quick lesson on RSI because sometimes it takes me 1 or 2 times to like fully get something. Yeah,
it took me a while. So
I would love to learn, your RSI methods in a way that I can kind of implement them into my trading. But Jake, again, thank you for coming on today. Thank you for taking time out of your Monday. Hope you had a great New Year. And again, everyone go follow Jake on Twitter. It's there in the chat.
Hey, thanks.
Have a good one, Jake.
We'll see you next week.
Yeah, I just wanted to hop in and say that on the Roth IRA discussion, I'm always a year behind. So I have 4 months now to contribute for last year, which I would do.
I'm ready to make some contributions to my Roth. I just need the money now.
Well, yeah, that's the idea. That's the idea, right? Yeah, right. Right. All right. So we have 4.5 months. No, that's not right. Yes, it is right.
You have all year to make.
No, 3.5. We have 3.5.
You have all year to make contributions for 2022 Roth IRA, but you have until April to make it make up for.
Yeah. So we got 3.5 months to make Aaron $6,000 so that he can contribute for last year.
No. Last year I'm good.
Oh,
I think.
Okay. You think?
Well, this is a good question. So if I contributed last year before April, does it go back to 2020?
No. Well, I don't know how yours works, but on mine, you designate which year you want to do it for. If it's before tax day. If you do it after tax day, then yeah, it's for that year.
I was so down bad like a couple weeks ago, like getting ready for Christmas and stuff, that I was like Googling like What's the tax penalty for pulling money out of my Roth?
Oh no, no.
It's actually not as bad as it's like an extra 10% on capital gains. It's not like it was actually not as bad as I thought it was going to be, but I didn't end up doing it.
Thank you.
I took a loan and stuff. I'm just kidding.
All right. Do we have our next guest here? Yeah, we do.
do.
Wait, but real fast before you bring him on, but after Mike's segment right now, we are going to share with you the spreadsheet, the public spreadsheet to put your stock pick of the year in it. So
yeah, and this is one. I mean, we'll definitely give the winner something at the end of the year, but we'll be doing more contests, weekly chat challenges, monthly chat challenges and stuff. This one's going to be more just like for fun. Like periodically we'll just check in on, oh, hey, how's everyone's 2022 stock of the year doing? I don't know, Spencer. I feel pretty good about mine.
Yours was Sunrun?
Yep. I don't think Run can, knock on wood. I can't go too much lower. It's a good company, I think.
I don't know. All right, let's bring on our next guest.
All right, options. Mike, how we doing?
Guys, Happy New Year. How are you?
You as well. Hope you had a great New Year. Good to have you back on. It's been too long.
It has. You guys been busy, though. That's great to see.
Yeah, we have. Do you want to go ahead and get a screen shared? We can go ahead and talk about some options plays that you're looking at. Maybe we'll have time to take a few from the chat as well.
Yeah, I mean, what we'll start with is going over, this is about the next year coming up, right? And I know everybody's talking about it. So you guys are in luck. I just, last week, I finished my 2022 outlook for the year, which is an overview of the market. And about 20 plus names, I think, can outperform the market. So I'll share a couple of those with you while I'm here.
Beautiful. Yeah, and I'm going to go ahead and throw your Twitter in the chat as well. It's just options, Mike, but I'll throw that link in there so everyone can go ahead and give you a follow as well.
So first thing you have to do is when you want to do this year, you have to decide what is the market going to do, right? And you have to come up with a thesis. Is the market going to be up big like last year? Is it going to be down this year? And on a personal level, I believe this year that the market is going to kind of struggle. I think it's going to be a very volatile year. I think we're going to get a big pullback at some point this year because if you look under the covers, there's this massive change that's been going on between the, throwing growth out the window, and now we want to be in value plays. We want to be in safety plays. And at some point that will change when earnings are good again. But right now the market's worried and the indexes do not reflect what's been going on under the covers. So now I'm looking at names that I think can be strong. And I think the most important thing that comes up to you is you want to make sure the names are either profitable or close and are well backed with cash. Because if they're not, in this environment, as the Fed continues to pull the punch bowl back, right, and then to raise interest rates, that could be a little bit scary. So let's start off with one that already triggered today, and that's Taiwan Semi. So you'll see this is the chart that I give out, and I give a whole bunch of, I tell you what I like, I tell you options you can play on it. I really like Taiwan Semi coming into this year in the semi sector, and one of the things I couldn't do is I looked at NVIDIA, and I said, how do you keep chasing this move in NVIDIA? Last year, NVIDIA had a great year. It was one of my outperform names. That thing ran rampant. But I'm like, if you look at the move over the last couple of years, it just feels like it needs to digest, consolidate. Well, guess what? Taiwan Semi's been digesting for a while. And, you can see here on the chart, I liked it off strong support if it got down towards 107 and then a break of 124. Well, unfortunately, this one just decided not to hang around today. It just took off on a strong report by CNBC out there today saying that semis are going to grow 10%. And you see this break of 124 and this move all the way up to almost 130 today. And you can see I have a target up there of 134 for the first target. And then blue skies at the second target would be right around 140. And then you get to see what it really can do. What I like about this name is when you switch it to a weekly chart, you can see that it's just starting to break out of this long consolidation phase, right? You see this chart right here, and you can see it's just been this long, nice consolidation phase. These are the type of names we love. These are what you're looking for when you're looking for something like this. It's in the right sector. They're a very profitable company. They make chips for Apple. They make the chips for AMD. They make the chips for everybody out there. So that's the type of name you want to look at.
That's right. We have a phrase here we like to throw around at Benzinga, kind of the thing behind the thing. And I think in a lot of ways, TSMC is the thing behind the thing in the semiconductor industry. Of course, you have NVIDIA, you have AMD, you have the favorites, but who's actually like manufacturing and supplying a lot of those chips is TSMC. And in a lot of ways, that makes Taiwan Semiconductor quite literally one of, if not the most important company in the world.
It does, and they have the best technology, right? They're making chips that nobody else can make right now. They're ahead of everybody. Now, there is one thing to watch out for Taiwan Semi this year. Now, I would be, I could not say this, and I talked about it in my perform, is, China's been threatening Taiwan. A lot of flyovers. They're making it very clear that they want Taiwan to become part of the mainland. And that is potentially a flashpoint that could impact this company at some point down the road. I don't think you'll hear a lot more about that until after the Olympics, because I don't think China's going to want to push this and have people not come to the Olympics and be isolated before it. But that is a story to keep an eye on after March, once the Olympics are over.
Yeah, and I mean, I don't know. I'm like wildly speculating, but I'd be curious if this company is one of the reasons why China has such a vested interest in Taiwan.
It absolutely is, because they're so far behind in their semiconductor space that they want to get this technology.
I actually read a really interesting report. It was kind of like on the timeline of semiconductors, just the world in general. And back in like the 70s and stuff, the US was actually the leader in semiconductor production, and kind of what led to that and what has happened since then, why that's kind of shifted and why it's Taiwan leading now.
Yeah. And again, it's just they do a lot of their manufacturing, but it doesn't matter because the U.S. companies are taking advantage of it, whether it's NVIDIA, AMD, or Apple. They're taking advantage of that technology more than anybody else.
Yep.
So should we do another one?
Yeah, let's keep it moving. And again, if you have, we're going to go through some of Mike's, picks that he thinks is going to, outperform the market in 2022. But as always, you can go ahead and throw some tickers in the chat, and we'll take a look at them if we have time.
So I'm going to bring up Boeing. Now, I'm going to foreknote this that Boeing twice now I've called this out and it hasn't worked the last 2 years. So be aware.
Okay, that's some good context.
My thesis behind Boeing is very simple. Airlines are back to pre-pandemic flights, right? All their planes are back in the air. They're flying all the routes again. Well, that means your planes are wearing down and planes have to be replaced. And they have not been replacing planes for the last couple of years. That means these planes are going to have to start being replaced. And that's good for Airbus and for Boeing. Unfortunately, here we only trade Boeing on the New York Stock Exchange. And if you look at this chart, you can see this very, very nice, easy to play trend. You have support coming in right around the 190 down to the 185 area with that trend line. And you have this downtrend that's coming in here. And if you take out that downtrend with volume, which is currently right up around the 50-day, Boeing could be set to fly. And I think all you're going to need to hear is that, airliners are starting to make orders again. And of course, you always have to be cognizant that there is no problems with Boeing, because Boeing has been, just hit between the MAX, the crashes, problems with the Dreamliner. They always seem to have bad news coming at them. But this is a company that did not take any money from the government, is still in good shape, and has not diluted the hell out of their stock like some of the other companies did, which puts them in good shape if they start getting the orders to move forward.
Got it. Yeah, I mean, this is why I basically called that out for the same exact reason, that like, hey, look, this is still below its pre-COVID levels, but people are flying just as much, if not more, than before COVID. Like, this has got to come back up eventually. But like you said, there are other problems outside of just demand with Boeing. So always got to be cognizant of those.
You do. It's easy to play with options too, because it doesn't have a lot of implied volatility. So you can go out to January and buy options up around the 270 area, or even the 280 area or 300 for a move and take advantage of it, which is really nice if you want to be in options and not in stock.
Yeah. I mean, so let's go over that idea real quick. So you just mentioned that there are some stocks out there that always have kind of a high implied volatility, right? If you're talking about Tesla, Firm, Roblox.
Yeah.
We were thinking about Roblox at the same time. But Boeing is not one of those. So what's the benefit to trading options on a stock like that has a lower implied volatility than some of those more crazy names we mentioned, like Tesla, Roblox, Affirm?
Well, you're not paying up to play. This is the first thing, right? When there's high IV on a stock, you're paying more to play with options on it. The higher IV, the higher the price of the options. And the problem comes in if something comes crashing down. A lot of time, the market makers, they're savvy. They'll lower the IV, which means not only are you losing money because the option's going down because the stock's going down, you're losing money because the implied volatility is dropping at the same time. And that is just, getting hit twice. Great if you're going short, but not great if you're going long. if you're sitting in
So,
a
but
long.
it works on the long side as well, right? That if you invest or if you buy call options on a stock that has lower implied volatility, and the stock starts moving up, maybe like at a faster pace than it was expected to, then that IV will also go up. Because I hear that a lot on the short side. Like if you buy a put on, say, GE, and because GE is going to have a low implied volatility, and GE starts going down, that's going to cause the IV to go up, and that way you're winning on both sides, kind of because the stock's moving down and you have the puts, and because the implied volatility is going up.
Right. That's really why puts tend to move so quickly, because implied volatility is going up and the stock's going down. The only time we see implied volatility really going up on the way up is when there's news or an event or uncertainty, right? If you're sitting here today and you're watching this trade, so Tesla today with that delivery number had implied volatility higher going into today because there was some thought that they might release their numbers over the weekend, which they did. And of course, now their IV has been high all day long because of the big move in it. But typically, a IV on the upside only pops through earnings or some type of news or something that gets everybody going, or a tremendous amount of option flow. When they're just hitting it very hard, the market makers want to make you pay up to get in.
Got it. So you have that innate kind of upside when you're, buying. Sorry, this is going to sound confusing, but you have that innate upside on the downside if you're playing puts, because the IV is going to go up while it's going down. And you're saying it still can be a thing if you're playing it on the upside, but just not as prominent.
Right. So typically when I want to enter a stock, I don't chase a candle. I let it come back in and wait for the tick to come down. Try not to buy into strength. You want to sell into strength. You want to buy into a little weakness or a little dip on options. You're going to get much better pricing on it. By the way, As we're sitting here, Apple just hit $3 trillion market cap just a minute ago.
Yep, I saw that in the chat. Breaking news:
Yep.
Apple is now.
Yo, they're gonna rug pull it. I'm calling it.
Okay.
They're gonna rug pull Apple.
Okay.
You know what? When we had this last time where they're going for one of these big $1 trillion numbers, I don't remember if it was 1 or 2. It hit it, pulled back for about 20 minutes, and then raged.
All right, that's good to know. We've got some context clues there. I remember when Apple first became $1 trillion company.
Yeah.
Or maybe it was when it first became the most valuable company in the world. Either way, I was like in high school, and it was like, oh my god, there's companies.
Well, they didn't hit 1 trillion until like 2008. It was like 18.
Okay, then I think they surpassed, and it was like I think it was like a big oil company to become like the most market.
Exxon,
yeah, I remember when that happened. That was like
Shell.
Yeah, it was Exxon. And it's like, okay, of course Apple is more valuable than X. It's 2013 or whatever the year was. It was like, and of course then we had who was it? Kramer famously said like the oil companies are uninvestable.
I remember that.
Yeah,
something like that.
If you say so.
Well, speaking of oil, I do have an energy name on here or two.
Let's do it. That's a good segue.
Do that, and so I don't want to give my whole thing away here because I do. This is something, but I want to talk about Marathon Oil, and the chart's gotten a little sloppy since it did it, but this is the type of name you're looking for in the energy space. You're looking for names that can go out there and grow, and this is a U.S. based company, a lot of shale and stuff. They have tremendous resources out behind them. And you can see that this has been outperforming most of the sector. And you have this nice downtrend break. It already broke it, right? So since I drew this chart, you can see it broke it. And now your next target is target 1. And once you get up above that, names like this can really just fly. You look at the weekly on this, and you can see this thing has room to run. So, get up to target 1 around 1830. And then if it breaks that, your next target is all the way up at the 2250 level. And this is what you're looking for. You're looking for names that can outperform. Again, for me, I believe the SPY will hit 5,000 or 500 at some point this year, probably sooner than later, as before the Fed completely takes away the punch bowl and starts raising rates and everybody freaks out because the last time they did this, the market actually worked out just fine. If you remember back into 2018, the market was really great when the Fed started raising interest rates, and it was ready for it. And if you believe like I do that it's going to be okay,
but why? But why Marathon over some other names in oil?
Because it's had a stronger looking chart. It has room to run. It's US based. And I just, I like the fact that with everything going on in the energy space, the US is going to keep pumping right now. Even though we want to move to clean energy, the US has so much money invested in energy right now. It just has to keep its economy going. As much as they would love to say we need to go to clean energy, you just can't do it overnight. So Marathon to me represents a better company, a better value than as much as I love Chevron, which is right around all-time highs right now. to me, that's just a big company that's moved a lot already. It's already all the way up there.
Got it.
Again,
No,
we're looking for names that can outperform, not names that are going to perform with the market.
Yeah, I like where I used to live in Missouri. A lot of gas stations and oil shops and stuff were run by Marathon Oil, and I always, for some reason, like had better experiences there than at other places. So I can get behind this. Is all I'm saying.
Yeah, and plus they just sold all their Speedwell stations, so they sold that business off.
What, the gas stations?
Yep.
Okay, that's good to know.
So yeah, so what you do is you go out and you look at different sectors for outperform, right? You want to find names in different areas. I'll tell you one area that I did nothing in. I did talk about BABA, but I really have no interest in it, is China. And I just believe that these names are a very, very dangerous. China names are very dangerous as we go into this year. And I'm really sure that somebody and some names in this sector are going to outperform, but you have a lot of things working against it. You have the Chinese government right now, which continues to crack down internally upon their own companies, making it a very hostile environment for their own companies. The Chinese government actively wants them to all relist in either Shanghai or Hong Kong, since they took over Hong Kong last year, which makes it deadly. And you have the United States wanting to delist these companies that are not complying with our audits, our auditing system. Now, BABA is complying, so BABA doesn't get covered under that. But I do see a lot of these companies like NEO and XPEV and LI and IQ that are, sometime over the next year are going to be being pressed about this and facing the choice of either committing to U.S. standards or delisting. And China doesn't want them to give their data to us. So I think you're playing a dangerous game if you're going to be in these names, other than day trading them or short-term swings. I don't really think I want to invest in the space, at least until we see something change.
Yeah, I mean, it's like you said, it's like everyone's been trying to kind of bottom fish in BABA. I called it at I don't even know, 170. I was like, oh yeah, this has got to turn around. And then it just keeps going down. I talked about how last Thursday it was up 10% in one day, and I thought, okay, this is it. This is the reversal. And then the next day it was down 4%. So I'm gonna need to see a lot before I'm convinced, okay, this is coming back.
I mean, and just look at the size of the fall. Everybody looks and says, oh, it went from 320 and it got down to what, 107, 105, whatever it is, in a little over a year. It's a value. Well, don't forget, there's a reason it's done this, right? There's a reason it's been beaten up this bad and it's gotten down this bad. And just because something is beaten up doesn't mean it's a value.
That's a really good point. Yeah, the whole area is super high risk. You definitely will get some bottom fishers now that the theoretical tax loss selling is done, and people are trying to call the bottom here. But it good luck with that.
I think you could make the argument on both the value and growth side for BABA that there is value at its current valuation and that it's still a growth company. But Mike, I agree with you that you can't just say something's value because it's been beaten down so much.
And something else that we didn't talk about, Jack Ma left. The new CEO so far hasn't really delivered or like they would want. So the new CEO has something to prove in this company still.
Good point. All
right,
right, Mike, what else we got on the list?
One more.
All
right, let's go to the travel space. So
oh boy,
I am really high on Airbnb.
And the market, me too, man.
And the market is not right now.
One of the names that I might add to my Roth.
Right. The market's not right now because the market doesn't consider Airbnb to be a travel name. They consider it more to be a growth name. Now, let's put this in good position here. Airbnb has been very profitable. They're turning a nice profit. They're well funded right now. Yes, they are a technology company. They provide, they don't actually have their own places they rent out. They allowed you to come to rent your places out, right? That's what they do. They provide that technology, kind of like Uber, same type of idea. That said, their last quarter was an absolute blowout quarter, which, I absolutely loved on that. It was a blowout quarter. And I thought at that point it was going to run to the highs at 220. Instead, it reversed and came crashing back down. So when I look at this name, I'm thinking to myself, well, I know I have strong support at 130, and I hope it doesn't get there. But if this market decides to pull 10 or 20%, there's a good chance you'll be able to get Airbnb very cheap. Right now, it's trying to take out this downtrend, and then you have this nice gap up here, and that's your target. Your first target is all the way up at 190. So that's $20 right there. And then a gap fills another 10 plus bucks above that. So you got these nice, easy targets, and you can take profits along the way. The one thing I always encourage everybody is don't just sit and everything and let your profits disappear. Take some, put stops in place. You can always get back in. This market doesn't like to go straight up. This market likes to go up a bit, then pull back, then push itself back up. But to me, I think this is a great company to look at. When you compare it to a Marriott, well, in my opinion, they're a similar space, and Marriott's almost here at an all-time high. So I think Airbnb is getting lumped in with growth names right now. And in this environment, we know growth is just everybody's worried about it, but they are a profitable company. I think they had $1.69 or something EPS profit last quarter. They have good cash, and I think they're well positioned. You just have to wait for it, and you have to be patient. And even though we're up today to me is not a great indication of where the market's going to go. I think this is finally the little bit of relief rally we've been waiting for all last week that didn't come in, and then we'll see what things really turn around by Wednesday morning.
Airbnb was one, I think, of all the companies that had turnarounds last year. Airbnb went from like, holy crap, like this is like, I'm talking about with the pandemic, like our company might die, to holy crap, with this is the best year that we've ever had, and it was like that. It was like a whipsaw. The whipsaw on Airbnb was so insane. I remember like reading a letter that Brian Chesky wrote. He's the founder and CEO, and he was like, yeah, like we weren't sure if we were gonna make it, and then like all of a sudden, like they laid off a bunch of people, and then all of a sudden it was the best year of their lives because people were wanting to travel and get away from it all, and
people want to get out.
Yeah, for sure. But that I remember like thinking like, holy crap, like Airbnb, like this is in March of last year or 2 years ago now. Like, man, like Airbnb, a company like that, like they're probably screwed. And then like fast forward 3 months when it gets to the summer, it's like, oh my gosh, Airbnb, everyone is doing Airbnb right now. Like it was crazy.
My daughter goes away. She doesn't get a hotel. She gets an Airbnb. Her and her friends all the time.
Yeah.
It's the changing. It's what the kids like. They enjoy it more. The younger generation, the kids. But you know what I'm saying. That's what they want to do.
Yeah.
And again, they had a great quarter and great guidance, and they got killed. I think it's just you have to wait. You might want to even wait till the next. We're so close to earnings season, right? They start next week. Next Wednesday, the banks kick off. You might want to wait till the next earnings just to make sense for validation. But to me,
all right, I'm actually debating. When after this segment, when we let everyone put in their stock pick of the year, this might be mine. I'm not sure. I'm with you, man. I'm so bullish on Airbnb.
Yeah, and I love it. And so anyway, I did about 22, 23 names out there, and I send out updates to everybody who signs up for it. They get it every once in a while. I do an update to some of the charts and what's going on. So a lot of fun. Enjoy it. I do it every year for myself, and I started offering it out 3 years ago. All
right, options, Mike.
Guys, catch you soon.
Always a pleasure to chat, man. Happy New Year again.
Happy
We'll talk
New Year,
again
guys.
soon.
Good night, everybody.
All right. Okay, so here's what I've got. I've got a link to a spreadsheet. I'm going to bring it up on the screen here. And
Spencer's such a great co-host. He didn't even he's not even making me put in my own submission. He did it for me.
No, I did it for him. All right, so here's what I got. And it's public, so everyone should have access. Everyone with the link should have access. So I'm putting the link in chat right now. This is the link to the Benzinga Live 2022 Stock of the Year spreadsheet. So obviously the point here is we're looking for like biggest winners on a percentage gain basis, not on a dollar basis, on a percentage gain basis. So you guys know, if you're watching before, you know Aaron stock, he put in Sunrun.
Wait, do they have to put in their opening price, or will it do it automatically?
No, they have to. It's manual, baby.
Okay.
I cheated a little bit. I put in an ETF. The caveat was like you got to find like a high flyer. That's the only way you're gonna win this, right? Is by putting in a high flyer. Like,
right, you're not going to win it by getting 25% return.
You're not going to win by picking Apple.
You're not going to win by barely outpacing the S&P 500.
You're not going to win by picking Apple.
You got to be like Luke Jacoby last year and pick a Ford that's going to go up 100%.
Hold on. I see you guys. I see you. Hold on. I see you.
Change. Anyone with link can edit. Yeah.
I'm changing. All right, everyone, refresh. It should work now. So I went with MSOS. This is the U.S. cannabis ETF. It's been so beaten down all year. I'm calling a bottom. I'm bottom fishing. MSOS is my pick of the year. Cannabis can be a high flyer. There you go. Now we're getting people are getting in there. So the last column will update automatically based on whenever we decide to update the price here, but just do the first few columns. And Daniel T going with SoFi. Daniel T, I was gonna do that, but then I thought that nah, do something else here. So Jadid's bottom fishing and Baba. I like it.
I love it.
All right. Okay.
So wait, Spencer, I gotta go through and update everyone's price.
No.
All right, we'll figure it out.
No, yeah, we'll figure it out. I figure let's like check back on this in like a couple months.
Yeah.
We're not gonna.
But I also said we're gonna do more of these as kind of weekly, monthly contests, just to spice things up, fun. And earlier in the chat, I asked if anyone's got feedback for the show. Email us, shows@benzinga.com. That will be our last ask for the day. Good feedback, bad feedback, whatever it is, all welcome and appreciated. Again, that's shows@benzinga.
Shows@benzinga.com. Yes, you missed IMMX. Alan, rewind the stream like an hour and 15 minutes. I think I'm either going to win this or come in dead last. It's more likely that I come in dead last year, but we'll find out.
We'll see. All right, y'all.
Oh, I couldn't tell if that was in. You guys hear the siren? I couldn't tell if it was in my ears or behind us. It's behind us. Okay. Yeah. All right, we got to wrap it up because we got the Moon or Bust guys coming up live right now. I'm going to take the spreadsheet off the screen there. We will come back to this. Don't worry. If you missed it, we will come back.
All right. Peace and love. Love you guys. Please smash the like, subscribe if you have not already. Without further ado, let's go ahead and get to Moon or Bust. We'll be back tomorrow, 11:30 a.m. Eastern, as we always are. Follow Spencer on Twitter, Spencer Israel. Follow me.
That's
Aaron
not my handle, but that's okay.
Israel Spencer? What is it?
SJ Israel.